0.2%, Google down 0.7%, Apple lower now by 0.6%. So again, recapping, stocks are trading lower now, red across the board, with the S&P down 0.2%. And that's Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Oh, man. Behind the scenes is an indication of what's to come. Get ready, everybody. All right, live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. Yes, it is Monday, July 22nd, 2022. Carol Masser along with Tim Stenovic. And we've got a flurry of big tech earnings, a Fed meeting, a deluge of key economic data. So come on, we're all just taking a break, Tim.
Yeah, I mean, would you do the same thing? Like wait and see what happens from these companies and from the Fed?
Totally.
All right, well, that's kind of what's going on today.
All right, we're going to get more, though, on this kind of wait a sec. Let me wait to see what's happening trade on this Monday. Also ahead, the Fed, as you know, getting ready to raise rates again, 75 basis points for a second time in a row. But they're also apparently getting ready to inflict more pain on the U.S. economy.
Oh, Apple kind of doing the opposite here, getting ready for a rare iPhone discount.
I never get anything on sale at Apple.
Nobody does.
No.
Student discounts, you can do those.
That's true. We're also going to talk about Tesla's gigantic money furnaces.
And President Biden on the need for the CHIPS Act. Well, our news team reports on how the U.S. is losing its way when it comes to chips.
And from healthcare to housing to networking, communities in need, we've got a lot going on this Monday. First up, though, let's get to the Market Drivers Report. Let's set your Business Week agenda on this Monday. Kriti Gupta, markets correspondent at Bloomberg in our Interactive Broker studio, along with Jess Menton, equities reporter at Bloomberg News. All right, Kriti, it's kind of a meh right now.
Is that,
right?
is that how you're feeling? Is that
like, have you done meh go on the terminal yet?
I don't know if it does anything.
Exactly, it doesn't.
That's the entire point, Tim. And the meh is both how I'm feeling and how the markets are feeling at the same time.
I feel you.
There's a mood here in the radio studio. It's like a little cloud.
Wait a second. Hold on. I saw on Instagram, Kriti, that you were like at a pool like yesterday. You had a little party. Your dog was there.
I was at Matt Miller's pool,
okay.
to be completely honest, because Matt was teaching my dog how to swim.
Swim lessons for the dog.
Swim lessons for the dog.
How'd the dog do?
Great. He was a
Didn't
total.
know Matt knew how to teach
No
dogs.
little floaties.
We didn't even have to teach him. He was just
No
paddling.
noodle.
Matt was holding him. He was paddling, and then we let him go on his own. It was just like a little duck.
That's a TikTok video. You do know that.
Well, it was on my Instagram story.
Okay, good.
Close enough. Anyways, the markets. It's a meh day in markets as well. The S&P 500 isn't doing anything because the show doesn't start today. It starts tomorrow. Specifically in the pre-market, you have the likes of General Motors, Coca-Cola, McDonald's.
Did you make your nachos for your Super Bowl?
If you made nachos for the Super Bowl, no, but I will tomorrow morning. That's what I'm doing.
Breakfast
at 5 a.m.
nachos.
Yes, breakfast nachos. No, but I'm really excited actually because I've been talking to you guys about the dollar over and over and over again. You guys are like, oh, no one cares about FX. Go away. But tomorrow it's going to matter.
We care. I heart dollar.
I'm sure you do, Carol. That's the
Tim
shirt.
hearts euro.
That's the shirt they're wearing right now.
Totally.
But tomorrow we find out. McDonald's is a really big dollar story. Coca-Cola is a huge dollar story. So is General Motors. These are all big names. And then that doesn't even begin to describe what you're going to see in the afternoon with Alphabet and Microsoft. So
yeah, Microsoft was the kind. They kind of rang the alarm bells last quarter when it came to FX.
Yeah.
Jess Benton, come on in here and give us the big picture about what analysts are thinking. Could this be some sort of turnaround for U.S. equities?
And that's a great question because I know a couple of weeks ago we were talking about what was happening with potential signs of bottoming when we were looking at FANG stocks and ARC stocks. And so something else, another corner of the market I've been looking closely at is small caps. Just particularly when you're in these type of either bear markets or a recessionary type environment, they're going to be the first ones to bottom and lead the economy on the way up. So RBC actually early on Friday, they had changed it's an overweighting they have for small caps, and they think that they have priced in the potential for a recession, and where they're trading on a PE ratio, they think that those look particularly good, and they favor those over large caps right now. And so looking at those, and obviously it between these different kind of head
Is that because of the domestic exposure?
Yes, and obviously the dollar does play into that as well. And also these are highly indebted companies when you are talking about these smaller companies. And so when the Federal Reserve is raising rates aggressively, it will impact those stocks more. And even though the Russell 2000, it had peaked out in November, a lot of those stocks had already begun begun coming down in early 2021. So it's been basically a year and a half of the majority of those stocks really coming down, except for the sort of bigger bellwethers within that index carrying it high. So it hasn't necessarily just been, 7 months or 8 months of this happening for that particular index.
So market sayers, let me just ask you, so what happens if, okay, there's optimism about small caps, and that kind of tends to lead the way when we're getting to recovery, but if we've got such a bunch of big companies reporting this week, if we hear from the big caps that they are not doing well, how do you kind of cross those two things?
Well, I think it gets really tough, and I think the key here, and this is what I don't have an answer to, but I'll tell you exactly what I'm watching, is how much they get punished, because I feel like there is this kind of parsing through all the data about the one tiny piece of their balance sheet that perhaps signals some sort of impending doom in their earnings and the broader economy. Every time they'll say headwinds, recession, slowing hiring, it kicks off some sort of selling spree in these individual stocks. We saw it last week with Snapchat, and I'm curious if that happens again, because we saw it with Target, where 25% decline on something like inventory sales, which, by the way, is not something that the stock actually is valued on or trades at. And nevertheless, within that week, all of a sudden, they were trading on this inventory to sales ratio, which was wild. So I think to me, that's going to be the question, and you'll get the answer first thing tomorrow morning with, I want to say, the non-tech earnings.
Right.
McDonald's.
Yeah, it'll come out very quickly.
The other economy.
Okay, so Jess, Matt, and Carol mentioned that we have a slew of earnings this week. We got 174 S&P 500 companies. It's the biggest week of the quarter for the S&P. Half of S&P 500 market cap to report earnings this week alone. What are the data points that you're watching in your world to give you an idea of what you're writing about?
So I'm taking a close look at what's happening with buybacks, because with the banks, say with JP Morgan, JP Morgan blamed it on what was happening with the Fed stress test and that they needed to raise more capital. Last week, we also heard from Discovery. They suspended buybacks, but that was also due to a probe when it comes to student loans. And now when it comes to technology companies, especially the top 10 biggest spenders, usually they're about 2/3 of that, as far as when you're talking about, say, Meta, Alphabet, obviously Apple, and so seeing what's happening there and what they're doing with that money, are they continuing to go on a buyback spree, or are they putting that more toward capex? Are they reinvesting in it? We've heard from a lot of these big firms, and they have either suspended hiring or had any sort of different freezes, or maybe they're cutting back on that. So that's going to be key as far as, and not even just technology, but we'll hear from Exxon and Chevron on Friday, and they have had quite a bit of a boom in the last couple of quarters because of that, obviously.
And if they're not doing it, you're like,
what's happening there? So that's the big key, because we know energy is going to have a great second quarter. It's just, what are they doing with that money now?
I'm already tired. I'm just going to say that. Let's go back to Matt's pool and the dogs. Kriti Gupta, markets correspondent at Bloomberg, and Jess Met, equities reporter at Bloomberg News.
Let's get a check latest world and national news. For that, we go to Wendy Gillette in the Bloomberg 1130 newsroom here in New York.
Thanks. Breaking this hour, a woman opened fire at Dallas's Love Field Airport before she was shot by an officer. Police say the 37-year-old woman fired several gunshots. The officer, who was nearby, shot her in her lower extremities. Police Chief Eddie Garcia.
She produces a handgun and begins firing. At this point, we don't know where exactly the individual was aiming. For the most that we're seeing now, she was aiming at the ceiling.
Police Chief Eddie Garcia says her motive is unclear. She's being treated at a local hospital. The FAA halted flights into the airport. The Biden administration is reportedly preparing a next generation of COVID vaccines. Bloomberg's Nathan Hager reports from Washington.
The health news site Stat reports the White House is hosting a summit tomorrow with executives from Pfizer and Moderna, along with key federal health officials and scientists. The gathering will lay out a roadmap for developing shots that reduce infection and transmission rates of COVID, building on current vaccines that so far have prevented serious illness and death. White House COVID response coordinator Dr. Ashish Jha tells Stat the new campaign will likely require more funding from Congress. He didn't give an estimate on how much. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Pope has apologized in Canada for the Catholic Church's cooperation with the country's policy of Indigenous residential schools, speaking through a translator.
The first step of my penitential pilgrimage among you is that of again asking forgiveness, of telling you once more that I am deeply sorry.
Global news 24 hours a day, on air and on Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette. This is Bloomberg.
All right, Wendy, thank you so much. Carol Master along with Tim Stanovic live in our Interactive Brokers studio. And I love this because we just talked about, with our own Jess Menton and Kriti Gupta, but just mentioning something she's keeping an eye on, and that has to do with buybacks.
Yeah. Yeah, this is so interesting. So Barclays is going to start to buy back as much as $17.6 billion of securities. It's a process that should determine its losses from a paperwork blunder that sought accidentally sell more structured and exchange-traded notes than it had registered. That is quite a bit.
What?
Yeah, it's a lot of money.
That's a lot. Okay, so the bank said the repurchase period will start on August 1st. So we're talking about what this weekend. It's going to expire on September 12th, according to a statement today. Barclays separately said it plans to resume the issuance and sales of some iPath exchange-traded notes, which had been suspended in April. In March, the bank said it had issued billions more securities than it had registered with the SEC. Oops. The error requires the firm to offer to repurchase affected securities at their original price under a so-called rescission offer. So this has to do with something that they kind of screwed up.
Hold on.
It sounds like.
Hold on. August 1st is in a few days.
I know.
That's crazy.
I know.
Here we are, more than halfway through the year. Summer's pretty much over, if you ask me. Should I not say that? All right, it's not quite over.
Come on, you and I have not done our summer vacations yet, so don't.
We tried to.
We tried, and then COVID got in the way.
Hey, interesting. Let's talk a little 60-40 here.
Sure.
This story catching my attention this morning. The 60-40 strategy will make a comeback. This according to Morgan Stanley. So they're saying that the classic 60-40 portfolio, we're talking investments are split into 60% stocks, 40% bonds. It's a classic. Merely resting, it's not dead. That's according to Morgan Stanley's chief cross-asset strategist after the strategy had its deepest first-half dive, Carol, since 1988.
So maybe it never really went away. It just had a bummer of a year.
Yeah, but it's been bad.
I know. No, it's been terrible. But, you're talking about years of largely unbroken gains. The Bloomberg Index that tracks the 60-40 portfolio did tumble 70% in the first 6 months of this year as rising inflation and interest rates hikes sent bond prices into a tailspin at the same time as stocks plunged into a bear market. I mean, there was no place to hide. It was pretty ugly.
Yeah, and that showed it.
Yeah, exactly. All right. Not RIP, I guess, not yet.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are pushing lower. The Dow, the S&P, NASDAQ all in the red right now, with the S&P down 7, a drop there of 0.2%. The Dow is lower by 12, down by less than 0.1%. NASDAQ down 86, a decline of 0.7%. Traders are bracing for earnings from several tech bellwethers amid the threats of a hawkish Federal Reserve, scorching inflation, and a looming economic recession. Among some of the big names scheduled to report this week: Meta Platforms, the parent of Facebook; Alphabet, parent of Google; and on Thursday we will hear from Apple. The 10-year yield 2.81%. That's a Bloomberg Business Flash.
To the close, Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
And a very good afternoon, everyone. Welcome to Kickoff to the Close. Carol Massar along with Tim Stenovic, and we are joined by our colleagues Carolyn Hyde, Gina Martin-Adams, and Katie Greifeld to walk Bloomberg audiences on TV, radio, and YouTube towards the closing bell, what to watch out for. And guys, I feel like whether it's tech results, that Fed decision this week, the ETF market, a severe recession, we have so much to worry about this week, Caroline.
Yeah, and it's got the market on tenterhooks. In fact, no one's really doing very much of anything. The city feels dead as I came in today, and certainly the volumes feel pretty muted as well. We're off by about 13% on the S&P 500, and we're flip-flopping between gains and losses. We're currently down on the S&P by about 7.7 points. Let's call it 8 points, 0.2% lower. The Dow Jones also feeling pretty muted. We're flat on the day, just down by 15 points of an index that is 31,881. NASDAQ, though, is really where some of the market moves are happening. We're worried about earnings. Big tech down 0.7%, and Russell 2000, though, your one key bright spot, up 0.3%, Katie, on the small caps.
And let's take you through what to watch as we kick off to the close. I, of course, have my eye on complex ETFs and sort of the boom that we're seeing in these products, even as FINRA sort of considers new rules on these sorts of products. In the meantime, if you look at the likes of SQQQ, for example, that is 3-time inverse exposure to the NASDAQ 100. It's been a real boom. Obviously, as tech has faltered, you've seen flows just flood into this fund in particular, sitting on net inflows of about $2 billion this year, Gina.
As if we needed more complexity in our life. Now we get complex ETFs. That's wonderful news, especially for those of us who are struggling with whether or not we're falling into recession or not falling into recession and how to play that in the equity market. I think that the tech companies in particular could tell us a lot.
Yeah, well, fortunately, Gina, we're going to be hearing from those tech companies this week. We got half of S&P 500 market cap going to report earnings this week. That's 174 S&P 500 companies. Okay, Alphabet and Microsoft kick it off tomorrow. Then we got Qualcomm, Meta Platforms, the parent company of Facebook. We got Shopify and Spotify on Wednesday. And then Amazon, Apple, and Intel on Thursday. And that's kind of still just the beginning.
Just the beginning. Earnings season never ends, but the new one starts this week. So Tuesday and Thursday, it seems like, are the key days to watch.
Then we look to Wednesday when it comes to the all-important Fed meeting. And indeed, the jury is currently out as to whether or not the Federal Reserve is going to be forced to pull back because of the slowing economic data, or indeed whether inflation is so ingrained and is so sticky that we're likely to see them having to go higher and faster. And no, we're not going to get pullbacks by 2023. This is kind of what the market's trying to eat away at the moment. You've got Morgan Stanley, for example, some of the key decision makers over there, Mike Wilson, one of them, saying, look, actually inflation is sticky. Don't start thinking we're going to get, 74 basis points cut from rates by 2023. JP Morgan thinking, look, because of the rollover in the labor data, because of the slowing that we're getting in some of those reads, that actually the Federal Reserve will do 75 basis points and then have to pause. And maybe we'll see a slowing, and maybe we'll see, therefore, this rate cut coming as soon as next year. But at the moment, the market is pricing in 200 basis points, of course, of hikes for this year, but then certainly starting to see basically a pivot is the way in which many are now calling it, Carol.
Well, that's why investors are essentially, and banks are essentially saying, this is what makes a market here, right? You got on one side Morgan Stanley saying that stocks still have room to move further. And then JP Morgan, like you were saying, Caroline, essentially saying, hey, inflation has peaked and we are going to see that Fed pivot, and equities in the second half of the year are going to be doing pretty well. I mean, look at what happened in the first month of the second half of the year. We're having the best month for the S&P 500 since October of 2021.
All right, so we've talked about pivots, recession, Fed, so much to get to. And Nouriel Roubini, who's not shy, always has a great, strong opinion. He's known for really calling the mortgage meltdown and the collapse right before that 2008 financial crisis. Well, he caught up with our TV colleagues earlier today on Bloomberg, and he's definitely entering into the recession, no recession fray, and he's kind of pretty dark about the outlook. Check it out.
You're going to see parts of the corporate sector going bust. You'll see the parts of the shadow banking system going bust. You'll see the household sector that is partly fragile going in trouble. You'll see some sovereign going in trouble. Yeah, the trigger for the financial distress is going to be a recession, and recession is not mild, shallow, but it's going to be severe and protracted. And there'll be then a vicious cycle between the real side and the financial side of the economy.
Okay, so if you weren't dark enough today on this Monday or feeling down after the rainstorm, Nouriel Roubini definitely bringing us down. But he also said shallow recession calls, guys, are totally delusional, Caroline.
Isn't he Dr. Doom? Isn't that what we tend to call him?
I was thinking
He's
about
living
that
up
as
to
you were
his
saying
name,
that,
isn't he? Yeah.
Like, come on. You know, right? All of the debate, Gina, that's out there. I mean, you watch earnings. Is he right? Is it going to be this dark?
Well, look, in the end, what really matters for the S&P 500 is, are we in an earnings recession or not? Economic recession, we can argue about this all day long. Even the administration is piping in some, knowledge on whether or not we're in economic recession technically. But frankly, what really matters for stocks is whether you're in an earnings recession, and we are. In an earnings recession, ex-energy earnings are falling. This chart shows you the top 5 tech stocks in the S&P 500. They've been in an earnings recession for a quarter already. They're still in an earnings recession and still showing earnings declines year over year. And that's what matters for stock prices is, will we finally hit bottom on that earnings recession for these big companies? How much will that drag us going forward?
And is that earnings recession already priced in at the index level? You think about the S&P 500 down about 18% year to date, or since the highs rather. I mean, how much further does it have to go?
All right, does tech turn it around this week? That's the question.
Yeah, we shall see. All right, that does it for now, guys. We're going to be back in just about 30 minutes time for a countdown to the close. And, of course, at 4 p.m., we'll have Beyond the Bell counting you down to the close on what seems to be a dark and gloomy Monday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this dark and gloomy Monday. Boy, that was a bummer, huh?
Yeah, but you know what?
What?
I texted my wife downtown. Here in Midtown, we had this rainstorm.
Yeah.
They didn't see any of it downtown or in
Are you
Brooklyn
kidding?
yet. Yeah. I mean, as of like a half hour ago.
That's pretty wild. It was
Yeah,
pretty dark
it was
outside.
wild in Midtown.
Right? It was
Yeah.
just like the skies got dark. Anyway, we do have lots to come. Tim mentioned those tech earnings, some big names. We'll see what they have to say. A Fed meeting, and then a big batch of economic data points, especially later on this week. You're listening and watching Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Or you are listening and watching Bloomberg Business Week on this Monday. Carol Massar along with Tim Stenivek. And coming up, listen, one of the big stories of the week. Yeah. What?
Yeah, I mean, it's the Fed, Carol. It's the Fed and earnings. I mean, which one do you think is more important? I'm putting you on the spot here.
I heard somebody talk about earnings because it's talking about the outlook, what's to come, and can earnings, can companies maintain margins and so on.
Yeah, and at this point, do we get any surprises from the Fed?
Well,
that's the question.
We know the Fed's going to do something.
Exactly. Rich Miller's going to weigh in just a minute. All right, we got a lot to get to.
I'm a little nutty.
Okay, that's okay. Charlie Bellett, we got 90 minutes to go. What's going on?
Indeed, what's going on? Red on the screen with the Dow, the S&P, NASDAQ, all trading lower right now. We have got the S&P down 8. That is a drop of about 0.2%. Dow Industrials down 21, a decline there of just about 0.1%. NASDAQ also on the minus side. The NASDAQ Composite Index down right now. NASDAQ lower by 84, drop there of just about 0.7%. NASDAQ 100 Index, full of big tech names, also on the minus side, down now by just about 0.9%. Stocks pushing lower as traders brace for earnings from several big tech names amid the threats of a hawkish Federal Reserve, scorching inflation, and a looming economic recession. As for the market backdrop, Sarah Hunt is chief market strategist at Alpine Saxon Woods.
I mean, you've got so many different cross currents that are going on and so many different forces acting on the market that you have these little mini moments where it's all about inflation and then it's all about recession and then it's about the Fed and then it's about the ECB and then, earnings are okay, so that's all right. I think you're just in a period of volatility because you've got a lot of different things going on right now and people are focusing on them in different moments.
And right now we do have the 10-year 2.81% on the 10-year, the 2-year 3.03%. Spot gold down $8 the ounce to $17.18, a drop of 0.5%. West Texas Intermediate crude up 2%, $99.62 a barrel. Apple has announced a rare retail promotion in China offering 4 days of discounts on its top-tier iPhones and related accessories in advance of the launch of its next-generation devices. And Meta Platforms is introducing music revenue sharing on Facebook to help creators make money from videos that use licensed music in an effort to better compete with rival TikTok. Again, recapping, we do have stocks trading lower. The S&P 500 index down now by just about 8 points, a drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenivek live in our Bloomberg Interactive Broker Studio. So on our radar, of course, this week, another meeting of the policy-setting arm of the U.S. Federal Reserve. We're talking about the FOMC meeting and expected to raise rates by 75 basis points for a second time in a row.
Yeah, the question is, what kind of pain is this going to inflict on the American economy, on the American consumer? Rich Miller, economics reporter for Bloomberg News, writes all about it. Rich this afternoon joins us on the phone from Washington, D.C. Rich, the headline, the Fed to inflict more pain on economy as it readies big rate hike. So far, we've learned from many companies that have reported earnings, the consumer is really resilient. So when we talk pain here, what are we talking about?
I guess we're basically talking about higher unemployment, and you're starting to see just little inklings of that with the unemployment claims. Folks filing for unemployment claims for unemployment benefits starting to edge up, and you're seeing even the tech companies, they're have bundles and bundles and zillions of dollars of money, it seems. But even they are saying, well, we're going to start curbing our hiring. We're reconsidering our plans. So you're seeing some inclinations, and housing, if you go to the housing market, that's really slumping, and mortgage bankers are getting laid off. So the pain is going to probably show up in higher unemployment, unfortunately.
How long will it take to, though? We've had a pretty strong labor market. Rich, how long does it kind of take for all of a sudden us, the Fed to say, and the world to kind of say, all right, we got some problems in the labor market?
That's a tough call, right? Because, they're juggling, right? If it was normal times and inflation wasn't running at 9%, they might be starting to think now, maybe we should, throttle back a little bit and maybe not do 75. But with inflation, at 9% and, even if you say we're going to get some help on gasoline, gasoline's down about 70 cents a gallon according to AAA, and if this deal with Ukraine and Russia helps us on food, but even if you take out oil, energy and food, the core rate is 6%. It's way too high for the Fed.
Rich,
way too high.
I got to ask you though, and Tim does a great job at always reminding us that when it comes to inflation, the Fed can do so much. It can't fix the supply chain problem. So when does at some point the Fed say, "Listen, folks, I can't fix the Fed, the supply chains, but now I'm seeing, some significant weakness in the labor market, and it's time for us to stop raising rates." I mean, will the Fed possibly get to that point, and should it?
I mean, I think it will get to that point. Again, it's sort of a delicate balancing out. They also, they have this kind of amorphous thing called inflation expectations. They focus on, and they don't want to, they don't want people to think that they can't get inflation down, because then people will say, "Oh gosh, I'm going to be, inflation's going to be stuck at 5%. I'm going to ask my, employer for 6%, and then the company is going to say, well, I'm going to raise my prices by 6%, and then we're off to the races. So it's more art than science. I wish I could give you a straight answer. I mean, J.P. Morgan was saying unemployment claims are now running about 250,000 a month, 250,000 a week, increase. If they're saying if it ticks up to 275, then the Fed might get start saying, hey, maybe we should start focusing a little more on growth and a little less on inflation.
So that's the metric that they'll be looking at when it comes to
I think
jobs.
The jobs market is going to be the metric. I think that's where they want to see some pain, but not,
okay, Rich, I'm so glad you used that phrase. They want to see some pain, because that's what Mike McKee says over and over again to us. He'll come in, he'll share some economic data that shows that the economy is slowing down, and he'll say, but remember, this is what the Fed wants to see. This is what they're trying to do.
Yeah, exactly. But, I'm trying to think of an analogy, but, it's like you want a little bit of something, but not a whole lot of something. You want to give your kids a little freedom, but you don't want them to sort of start raiding your liquor cabinet, right?
No, that's a really good point. All right, hey, listen, just 30 seconds here. The data points this week, we get some really important ones later in the week. Is that almost as important, if not more important, than the Fed meeting itself?
Yes, I mean the GDP is going to be very interesting, but one that a lot of people are focusing on that's kind of below the radar is something called the Employment Cost Index, because that'll give a sign for whether wage growth is slowing down, and that's again back to the labor market, and that's a key one. That one comes on Friday, and I expect the Fed will be focused on that like a hawk.
Right, that plays into those inflationary numbers. So glad we got to check in with you. Bloomberg News economics reporter Rich Miller joining us on the phone from our bureau in Washington, D.C.
All right, well, let's come back here to New York City and get a check on the latest world and national news with Wendy Gillette in the Bloomberg 1130 newsroom here in New York. Hey, Wendy.
Hey, actor Paul Sorvino, known for his roles in Goodfellas and Law & Order, has died in Indiana of natural causes. He was 83 years old. A woman opened fire at Love Field Airport in Dallas this morning before she was shot by an officer. Police say the 37-year-old fired several times, apparently at the ceiling. Police Chief Eddie Garcia.
There was several rounds that are found. Simultaneously as she's doing that, our officer engages the suspect, strikes her in the lower extremities. She's taken into custody and is currently at Parkland Hospital.
Chief Garcia says her motive is unclear. No one else was hurt. Congress is getting an update on the situation in Ukraine this week. Details from Bloomberg's Amy Morris in Washington.
Lawmakers in the House and Senate will get separate classified briefings on Wednesday afternoon. The U.S. has delivered a dozen defense systems and approved 4 more in a new $270 million military aid package, including as many as 580 additional anti-armor reconnaissance drones. Meanwhile, the Pentagon is looking into the feasibility of providing fighter jets to Ukraine, although that effort is in its very early stages. In Washington, I'm Amy Morris, Bloomberg Radio.
Pope Francis has made history in Canada, apologizing for the Catholic Church's cooperation with the country's Indigenous residential schools.
Pido perdón humildemente por el mal que tantos cristianos cometieron contra los pueblos indígenas.
More than 150,000 Native children in Canada were forced to attend the Christian schools from the 19th century until the 70s. The Canadian government has admitted physical and sexual abuse were common at the schools. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette. This is Bloomberg.
All right, Wendy, thank you so much. Carol Masser, Tim Stenovic here at Bloomberg headquarters in New York City. And this story by our Debbie Wu, definitely catching our attention. And I feel like we know President Biden is pushing for this CHIPS Act, looking to make the U.S. semiconductor industry much more competitive, but looking for legislation, right, policymakers to move on this. In the meantime, Intel looks like they got a big win.
Yeah, wins big when it comes to a customer in a boost for foundry ambitions. The Intel we're talking has secured one of the biggest customers to date for its year-old contract chip-making arm. It's a big win for the company and Washington's goal of boosting semiconductor production here at home, Carol.
Yeah, Intel's apparently going to make chips for MediaTek that go into a range of devices, according to a company statement. The Taiwanese designer whose semiconductors are used in Amazon.com Echo speakers and Peloton interactive bikes will lean on its partners' global manufacturing footprint to get closer to markets in the U.S. and Europe. This is where you get to onshoring, nearshoring, right? We hear a lot more of this going on.
By the way, a good reminder of what chips are in, right?
I know, right?
Pelotons.
What? Aren't you made of chips?
Potato chips? Yeah, I was going to say potato chips, yeah. Corn chips. No, the partnership is a significant achievement for Intel's efforts to compete with Taiwan Semiconductor Manufacturing Company, TSMC that is, and also Samsung in South Korea in the foundry business, or making chips for external clients. Intel Chief Executive Officer Pat Gelsinger has included contract chip making as part of a comeback plan that involves modernizing its factories and building new ones to restore its leadership.
Yeah, it's interesting. Intel's manufacturing technology, though, just some perspective, it does lag its Asian rivals by at least a generation.
That's remarkable.
I read that and I was like, what? And this is why this has gotten, we talk about national security. There's food issues, there's water, there's, basic commodities. But chips, right, go into everything.
Exactly. So
Defense,
the U.S., right, and we're going to talk about this with Ian King in just a few minutes and Joel Weber too, but the U.S. is keen to avoid a repeat of the chip shortages that have cost companies, including American automakers and tech firms, hundreds of billions in lost revenue just over the last couple of years, Carol.
Yeah, meantime, we've got Congress, right, looking to clear chips, a bill before the House exits for recess, so something else we're keeping an eye on. But we are talking more about semiconductors in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day with the Dow, the S&P, and NASDAQ all on the minus side right now. We do have the S&P 500 index holding close to session lows for the S&P. A drop right now of 10 points. The S&P lower by just about 0.3%. Dow Industrials down 31 for the Dow, a decline right now of 0.1%. NASDAQ on the minus side by 94 for the NASDAQ Composite Index. That is a drop now of just about 0.8%. 10-year yield, 2.81%. We do have the 2-year yield of 3.03%. Spot gold down $9 the ounce, a drop there of 0.5%. Crude, though, rallying 2%. West Texas Intermediate crude oil, 96.61 a barrel. Stocks are declining as traders brace for earnings from several tech bellwethers amid threats of a hawkish Federal Reserve, scorching inflation, and a looming economic recession. So again, recapping, the Dow, the S&P, NASDAQ all lower right now. S&P 500 index down 11, a decline of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there. Well, we know that President Biden is talking about the need for the U.S. to get behind the domestic semiconductor industry with the CHIPS Act. And with that in mind, the remarks in the current issue of Bloomberg Business Week that is out on newsstands, online at Bloomberg.com/businessweek, also on the Bloomberg, get into how the U.S. risks falling even further behind with the tortured CHIPS Act, that act specifically.
That piece by Ian King, U.S. semiconductor and networking reporter for Bloomberg News. Ian, this afternoon, joining us on the phone from our San Francisco bureau, where I guess I should say it's still morning for a few more minutes. Ian, really good to have you with us. Before we get going on this, remind everyone what the CHIPS Act is, what it stands for, and what it stands to provide.
Yeah, I mean, this is something that has been around for more than a year now, and it's basically an attempt to put together a package of about $52 billion, and this is of federal money that would be given in the form of subsidies and grants and so forth to bring semiconductor manufacturing facilities to this country. A portion of it would also go for various kind of educational / R&D kind of subsidies and stimulus packages as well.
Hey, Ian, how do you square what feels like an industrial policy that we see in other nations with kind of a free market economy?
Yeah, I mean, this is the debate that I think explains sort of why it's been such a torturous process.
Yeah.
You have, politicians on the right and on the left that kind of disagree with this kind of thing for, fundamental reasons. On the left, you have people who are like, look, this is corporate welfare. We shouldn't be doing this. These companies are making a lot of money. They should be able to chart their own course. And on the right, you have those who are saying, look, the market determines winners and losers. That's the most efficient way to deploy capital.
All right, Joel Weber, of course, the editor of Business Week, also in studio with us. I mean, I feel like this is one of the big stories of our time. Tim and I were joking earlier, Joel, that, there's chips in everything.
Well, chips in everything, and U.S. has small amounts of money that they could throw at this. And it kind of comes down to D.C. at this point. Like, what kind of fireworks are we expecting, or are these just like those fireworks when the fog rolls in and everybody takes a recess, Ian?
Yeah, I mean, it's been about to be done for as long as I can remember.
There it is.
But I have to say, speaking to the people we spoke to in the run up to this, they are saying, look, we're as close as we've ever been. We think this gets done by recess because finally people are beginning to understand the urgency here.
Ian, you've been reporting on this on chip companies for years, semiconductor networking reporter, as semiconductor and networking reporter. What's going on behind the scenes here in terms of lobbying, in terms of these companies pushing for what they're pushing for in D.C.? Like, what are those conversations that are happening?
Lobbying when you've got $52 billion
on the line, right?
Well, I mean, you talk about $52 billion. I mean, that's quite a lot of money for somebody like me.
Same with me.
Too.
For the chip industry, it really isn't. The CapEx budgets of Samsung, of Intel, of TSMC, it's just not that much money. So really, I mean, a cynical person would say, well, go back to Intel's Analyst Day, where the Intel CFO stands up on stage, tells analysts our gross margin isn't going to go down as much as you thought, and here's why. And the here's why is because we're going to get this amount of money in the form of state subsidies around the world as we build out these plants. That would be the cynical approach. The more sort of proactive approach would be, well, this is a Sputnik moment. This is something that, the nation states need to get behind because this is really important for our future.
So Ian, when you think about where the conversation, at least in the U.S. government, can go, I know one of the things that really stuck out to me is those advanced chips, the ones that DoD and Pentagon and others need. So much of the conversation is how do we secure a supply chain for those products? And do you think that's ultimately what's going to drive this conversation forward, or is it a much bigger ambition to try and get the U.S. back into a much broader kind of chip game?
No, I think you've touched upon a very interesting point there, because it's become a multifaceted argument. On the one hand, there are the economics. Semiconductors are increasingly more important as they get into things like cars and things that they went in before. So what if we don't own the technology, then where are we relative to other nation states around the world that we need to be doing well against? And the other argument is, well, security, that if you don't need the most advanced chips in missiles, you need the most advanced chips to design missiles, and so on and so forth. So there's been a lot of currents and a lot of threads that have come together to create something approaching a consensus that something needs to be done here, and that we actually need to have industrial policy, which has been such an anathema in this country.
Okay, so that brings us to D.C. and the holdup there. What specifically is holding this up?
Well, surprise, surprise, nothing gets done quite as quickly as it should, given the process. But what's really been going on is that the elements of the Republican Party have been trying not to hand a victory to the Biden administration, and they've really dug their heels in and said, look, you can't tie this to other broader goals, such as spending on economic stimulus or on climate goals and things like that, if you're going to do this, you have to do it on its own. Otherwise, you don't get it. So that's been the to and fro on this, I think.
So worst case scenario, Ian, let's kind of game that out a little bit. What does this look like if everything is not?
You're never getting another electric car, Joel. That's what's happening.
Well,
seriously,
that's one. I've got mine. It's more like yours is the problem.
Exactly.
Yeah, I think you just have to listen to what the chip makers themselves said. It's like, the normal cycle in Washington is 2 years, but we get there eventually at the end when we rush these things through after we've sort of gone backwards and forwards and horse traded. Chip industry say, no, that doesn't work in this case, because we are making decisions now about the production facilities that we'll have in 2-3 years' time. Give us that certainty, we'll make these decisions and these commitments. Don't, and we'll go and build elsewhere. That's the bottom line.
Ian, just got about a minute, maybe a little bit less here. I mean, you understand the chip industry. You've seen a lot of cycles. Is this a case of kind of bailing out an industry that didn't make smart decisions 5-10 years ago, or is this about something very different in a very competitive global environment, and it makes sense that the government should do an assist here?
It's very different in terms of geopolitical goals, and we also have supply chain security goals that have never been considerations before. Previously, it was all about efficient use of capital, and that's why I have a supply chain spread around the world. Now we're saying we need to look at this differently, and that's what's going on here.
You want to know about chips? This is the guy you talk to. Ian King, thank you so much. This is the remarks in the current issue of Bloomberg Business Week. Ian King is U.S. semiconductor and networking reporter at Bloomberg News, joining us from our San Francisco bureau. And our thanks also to Jill Weber, editor of Bloomberg Business Week, joining us here in our Interactive Brokers studio. We mentioned this issue is out.
Yeah, check it out on newsstands now, online, and at Bloomberg.com/businessweek. Carol, we are a little over an hour from the close, and we got the S&P down 0.2%, the NASDAQ down 0.8%.
It's a meh kind of day.
It is.
A few things going on
I'm feeling
this week.
better, though.
There's a lot going on this week. All right, we're going to check in with our TV colleagues in just a moment.
down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We are but 60 minutes left in your trading session now. Caroline Hyde, Katie Greifeld, Gina Martin-Adams in the house and TV. Meanwhile, we are joined by our colleagues Carol Massa and Tim Stenowek. Together we welcome, as we do day in, day out, TV, radio, YouTube, to dissect what is basically a pretty muted day of trading, Carol.
Yeah, we're calling it meh kind of a day because it feels like, okay, we're all waiting for all of this stuff to come. Check out, though, some of the grill makers because they are getting hammered, right? Like, I thought we were all
They're getting cooked, Carol. You missed it right there, okay? They're getting
really
cooked.
had to do that.
I'm
Maybe
sorry.
it's just too hot out. We don't want to grill. But anyway, Weber was down 22% at its lows. It's still down about 15%. Traeger, ticker is Cook. It's also down about 7-8%. What came out, Weber, earlier, they withdrew their full-year forecast today, announced the CEO was leaving, and their third quarter net sales trailed estimates. Talk about like, wow, that's a bummer, right?
Yeah.
That'll bring down a sector.
It is. Speaking of a sector that's moving lower, all of crypto is on the decline. I wish I actually had a good reason for it, but we can't really talk about fundamentals when it comes to crypto. But do you remember about a week ago, we're just talking about Bitcoin over 24,000? Well, you know, now it's below 22,000. So it's in that trading range of between 19,000, 22,000 that it was stuck in for the better part of the past month.
Taking profits? I don't know. Short-term in and out trades going on in crypto. Let's look at what's happening on your in and out basis on the S&P 500 because, I mean, we are meh when you're looking at volumes, certainly lower on the day across the board. And we're seeing stocks basically pulling back lower as well. Really energy trying to give the index a fighting chance, but overall we're down by 0.3% and 13 or 14% lower in terms of your market volumes on the S&P. Actually, NASDAQ hitting more session lows at the moment. We're off by 0.9%. So big tech on the downside ahead of their earnings. Dow Jones Industrial Average is off by 0.1%, but still clinging on to those gains, taking it for the team as the Russell 2000. We're up 0.2%, Gina.
Yeah, and interestingly, the consumer discretionary sector actually leading losses. When we look at the GRR function on the terminal, we see tech definitely down, but consumer discretionary down more. And when I'm looking at the greater details within that sector, it's basically every group, but this small, tiny auto segment. So it's all the retailers, all the consumer stocks generally really suffering, which would suggest to me that there's more nervousness than just about tech. It's about a broader slowdown that has emerged.
And if we dial down even more into some of the individual names, this was kind of fun. World Wrestling Entertainment, WWE, upgraded to a buy from a hold at Loop Capital. They say there's a greater likelihood that the company will be sold now that Vince McMahon is retiring. Shares higher 7.5%. Also want to highlight Exxon. Oil's higher. Exxon is too, up more than 3%. On the other side, Bitcoin lower. That means Coinbase is too, down over 5%. And finally, Datadog. RBC cut its price target today to $115. That comes after KeyBank cut their price target last week. Datadog taking all of that not in stride, down more than 4%.
Yeah, nowhere near the 115 price target and sub 90. Overall, though, this is an earnings kind of a week. This is a Fed kind of week. And this is, wanted to put into perspective just how busy this week is going to be in terms of earnings, because I think we get basically about half of the S&P 500's market capitalization are reporting $17 trillion worth of market cap reporting earnings this week. And of course, you've got the big key heavyweights of Apple, of Amazon, and therefore so much to be digesting when it comes to some of the micro data and how that feeds into the macro. What are they doing about hiring? Are they seeing inflation roll over? What is the key takeaway in their forecasts, Carol?
Yeah, a lot of earnings, Caroline, which I like because it's very specific that we hopefully get from some of the executives about the outlook. In the meantime, I feel like there's so much debate, so much wishy-washy about recession, no recession, that it's almost refreshing that we hear from Nouriel Roubini, who's got a very definitive thought about whether or not we get a recession and what it might be. We think this is so important. It's one of the most read stories, but it's also one of the most watched videos on the Bloomberg. So we wanted to share this with our audiences once again. Here's Nouriel Roubini.
You're going to see parts of the corporate sector going bust. You'll see the parts of the shadow banking system going bust. You'll see the household sector that is partly fragile going in trouble. You'll see some sovereign going in trouble. Yeah, the trigger for the financial distress is going to be a recession, and recession is not mild, shallow, but it's going to be severe and protracted, and there'll be then a vicious cycle between the real side and the financial side of the economy.
Of course, that's economist Nouriel Rubini. He runs his own macro firm. But, you know, guys, I mean, he's known for being very strong, right, in his opinions. He did call it right in terms of the mortgage meltdown back in 2008. But I do wonder, Gina, I feel like we haven't necessarily seen those financial cracks within the system. And this is something we know the Fed also watches.
Yeah, and there's also some question as to how big those cracks will be without an excess supply that has emerged in the economy. I mean, I think to get the cracks, you've got to have a real breakdown in real economic growth first. And that's the problem is we're really struggling to see that tremendous breakdown in growth occurring. Most companies are saying, you know, the outlook is still intact. Maybe it's not as strong as we thought it would be, but it's still intact despite all the risks that have emerged this year.
But if we think about what companies are doing, I mean, we have some high-profile examples of the labor market, for example, and you think about Microsoft, Google, Lyft, just in the last couple of weeks announcing layoffs or hiring pauses. And then you think back to what Amazon said back in April, that they were overstaffed. I think it's going to be really interesting to see whether there's more of that to come. And that gets into whether we really have talked ourselves into a recession, whether these C-suite executives see it coming and whether that impacts their actions and ultimately tips us there.
Yeah, we kind of talked about this a little earlier on our program with Rich Miller, economics correspondent down in Washington, D.C., who has a new piece out that talked about the type of pain that the Fed is inflicting on the economy. And Katie, you nailed it right there. It's increasing unemployment rate. And to what extent, Caroline, the Fed is going to be okay with increasing the unemployment rate in order to get inflation down. The jobs market is so hot right now. And where are those layoffs coming from? I know we've seen anecdotal evidence in the tech community right now, and we've seen a slowdown there. But when do we start to see it materialize in a bigger way that the Fed says, okay, that's enough, it's ready for us to pull back?
Or whether they're still just going to be front and center about inflation. And the irony is, of course, they were front and center about jobs. That was why we ran this economy hot, was because they wanted a more inclusive labor market. And ultimately, it is the lower income bands that get hit most by inflation. And of course, probably will be, well, last in, first out. And I think that's just what's so painful. These aren't just data points. These aren't just moves in interest rates. These are people.
Yeah, and I think that's a really good point. It's just a matter of degree, but we know the labor market is weakening. Challenger layoffs bottomed all the way back in November of last year. Initial claims bottomed in March of this year. So we've certainly seen the signs that labor markets are weakening. It's just a matter of degree at this point. At what point does it push up that unemployment rate? At what point does it push up the benchmarks that are very meaningful for Fed policy is now the question.
And the same logic applies to the consumer. We haven't seen yet the cracks in growth, in the labor market, in the consumer. But I mean, there's plenty of signals to suggest it's coming. It's not here yet, though.
All right. Well, the conversation is going to continue. We'll be back in less than an hour's time. Our cross-platform coverage, we call it Beyond the Bell on radio, TV, and YouTube. We will count you down to the bell on this Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You know, I would argue, too, that just listening to our TV colleagues, that we are going through kind of a reset to figure out what the economy is post-pandemic and after all of the stimulus, and that maybe
Wait, are we
we need
post-pandemic?
Well, we're not. We know
President's
that.
got it.
But it's a function.
Lawmakers are getting it today.
But we can function, right?
Right.
Like it's not, you know, thank God, I think the hospitals, you know, the hospitalization rates have kept a little bit lower, or the people that are getting into the hospital have not been vaccinated.
We have the tools.
Correct. And I keep thinking about this reset, and maybe we need, forgive me, and I think, you know, Gina and Caroline bring up that when we have a recession, people lose jobs. It hurts. And there's certain people that get impacted more severely, but do we need some kind of recession reset to kind of figure out what our economy needs to be on the other side?
Maybe we don't even need a recession reset, Carol. Maybe we just need a little bit of softness because, especially when it comes to hiring. I mean, look, I have anecdotal evidence and I have the hard data, right?
Yeah.
The anecdotal evidence tells me that, you know, speaking to friends who work for companies, they can still go to get competing offers and then bring them back to try to get a raise. I have a friend doing that right now. At the same time, he's a manager and he's having trouble keeping people below him because they're not happy with the salaries that they're getting. So we're seeing that still. The hard data for that, Carol, has to do with the fact that in the U.S., we still have, what, more than 10 million jobs available?
Yeah,
2 jobs for every unemployed person.
And we know that there are, I know it anecdotally, you probably do too, there are people who are not coming back to the workforce. They were either old enough, could retire, or they just said, I've had it enough. Rich Miller, who you mentioned, our Bloomberg News, great story on the Bloomberg about the Fed causing more pain, He said one of the key economic points and data points is the employment cost index. Let's see if wage pressures are starting to come down, because that will certainly play into the inflation numbers as well.
Let's get to world and national news. For that, we go to Wendy Gillette here at New York. Hey, Wendy.
Thank you. Actor Paul Sorvino, famous for his roles in Goodfellas and Law & Order, has died. He was 83 years old. Democrats have gotten another reminder of their tough math in the evenly split U.S. Senate. Bloomberg's Nathan Hager reports from Washington.
Joe Manchin of West Virginia says he has COVID-19 and will have to work in isolation while he recovers from mild symptoms. Manchin is just the latest Democrat to be sidelined with the virus. Delaware's Tom Carper and Tina Smith of Minnesota just announced their own positive tests last week. Vermont Senator Patrick Leahy has been out for weeks recovering from hip surgery. Democrats will need all 50 votes plus a tiebreaker from Vice President Kamala Harris to pass a drug price and Obamacare subsidy bill before the Senate's August recess begins next week. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former President Trump is getting ready for his first appearance back in Washington since he left office 18 months ago. He's giving a keynote speech at the America First Agenda Summit tomorrow night. He's not expected to announce he's running in 2024, but Bloomberg Government's Emily Wilkins reports this will be a big test for the former president's support within the Republican Party.
You've seen more folks begin to disapprove of him since March, since the first of the January 6th committee's revelations and news began to come out. But, you know, there is still a solid chunk of the population that approves of him, that wants to see him run for president again.
BGov's Emily Wilkins. And Mega Millions, Mega Massive right now, drawing tomorrow night for the $810 million jackpot. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette. This is Bloomberg.
All right, Wendy, thank you so much. Carol Massar, longer due instead of like what?
No, we're both just going back in time and talking about our.
Does anybody remember? Is it Foxconn soda? It's like an old soda brand. You can find it in Connecticut. And
are you talking about Moxie?
No,
that's Maine. That's
it's
Maine
like made
soda.
with real sugar.
Okay, well,
I'm going to find it.
Speaking of Foxconn.
Foxconn?
Okay.
Is it Foxconn, guys?
All right, I want to talk Foxconn here, Carol. China has forced some of its biggest companies, including the iPhone maker Foxconn and the oil producer CNOOC, to operate within a closed-loop restricted system for 7 days as the southern manufacturing hub of Shenzhen battles its latest COVID outbreak. So, Carol, you were talking, we're talking here in the United States, we have the tools to deal with the pandemic.
Right.
We've still got a COVID zero policy happening in China that threatens to wreak havoc, continued havoc on the world supply chain.
Which we talk about also concerns about global growth, right? Because if China is shutting down, that is going to play big time into supply chains and those global growth numbers, which is why we watch this economy so closely in terms of what's going down. Keep in mind, this lockdown coming as China narrowly escaped an economic contraction in the June quarter when a series of rolling lockdowns shut businesses nationwide, eroded employment, and hurt consumer spending. The Shenzhen action taking place months before Foxconn Technology Group. All right, it's not Foxconn soda. I think it's Foxon.
It's on. Sebastian said it's Foxon Park.
Okay, Foxon. Okay, which makes the majority of the world's iPhones. I mean, this is why we constantly. I know everybody makes fun of me that I talk about the Nasdaq Golden Dragon Index so often, but there's just so much in terms of policy oversight of Chinese tech or or what's going on in manufacturing. I know you don't. Make
it's the
fun of me.
second largest economy in the world.
Really,
it's pretty
Tim?
important that we watch it closely.
It is important.
It's really important. And look, it's the supply chain. The U.S. U.S. goods are inextricably bound to it. And we've learned that. That's come into sharp relief over the last 2.5 years, right?
Yeah, absolutely. And we've talked a lot about China being very stringent when it comes to the COVID zero strategy. And then we saw them kind of maybe backing off of it a little bit and thinking about what's going on in the economy. And they've done a lot of policies to shore up the economy.
Okay, they have, but serious political implications here. We talked about it last week with the big take. The wealthiest people in China are getting sick of COVID zero.
Foxon Park Beverages, they're based in Connecticut. I wasn't crazy. Thank you, Sebastian. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ are all declining. We're looking at a tech-driven rout. Let us get the latest now as we head over to the First Word breaking news desk for today's afternoon call. And here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks drifting lower in a somewhat quiet tape, with the Dow currently down 55 points. S&P's dropped 16. Well, the NASDAQ is off by 120. The U.S. 10-year yield at 2.81%. Gold is down 11. Energy is climbing. And Bitcoin is down by 4.7%. Among the main 11 S&P sectors, leaders were energy and the utilities. Consumer discretionary and technology were under pressure. Leaders to the upside in the Dow, Chevron and Travelers, while Salesforce fell 3.8% and led to the downside. After earnings, Newmont plunged as much as 14%. And in other news, Meta to start music revenue sharing on Facebook videos. In deal news, Mastech to acquire IEA in a cash and stock deal valued at about $1.1 billion. And wrapping things up, Whirlpool reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with a Bloomberg Business News Flash. Charlie is going to be including the results of Amazon, Apple, Meta, Alphabet, and Microsoft in his flashes throughout the week.
That's it, Carol?
Just a few companies, little known.
I mean, look, just to repeat a stat that I think is, just speaks to the power of where we are with this week of earnings, Carol. We got half of the market cap of the S&P 500 reporting this week.
That's a whoa. Big part of that market cap is Apple, which will be out, one of the largest market cap companies in the world. And there's a couple of stories out this week, including about them announcing a rare iPhone discount for some buyers. We're talking about buyers in China.
Yeah, don't get too excited here, okay? So it's going to take up to 600 yuan. That's about $89 off the prices of its top-line iPhone Pro series between July 29th and August 1st. Let's get into it with Anurag Rana, Senior Software and IT Services Analyst from Bloomberg Intelligence, joining us on the phone from Chicago. Anurag, I mean, the fact that we're even talking about an $89 discount off the top-line iPhone 13 Pro for a period of, 5 days just in China, kind of speaks to the power of this, right? And the fact that Apple doesn't do stuff like this much. How should we understand it?
Yeah, it is the power of the brand, and, you're right, we don't see that stuff. But frankly speaking, things in China are a bit different right now than the last few years because of the COVID lockdowns. And as you know, we get into a new model coming into September, October timeframe. So you have a backlog of products just lying around. You want to get rid of it.
Does it show that it's been Apple's so good when it comes to its supply chain? I mean, this is in Tim Cook's DNA, right? Like, he's a supply chain guy. He understands supply and demand, and Apple's pretty good at understanding what consumers are going to buy around the world. Does it show weakness for the top of the line iPhone? I mean, should investors be concerned about this?
Well, there's not much you can do if the factories are closed down and the government's not allowing anybody to go outside and shop. I think that's beyond Apple's control. I don't think it speaks anything about either Tim Cook's ability or Apple's brand recognition. It's just an unfortunate situation right now, and the supply chain is going to be front and center when they report later this week.
So, this one is such an important one, Anurag. I always just feel like, because Apple is a great play on what's going on with consumers, as you guys were talking, the supply chain, there's just so many different moving parts. What kind of story do you expect, kind of on a bigger macro scale, that Apple will share with us or reveal with us?
For me, I think the biggest story is the strong dollar. I think that's going to make things look really worse for a lot of technology companies over the next 7 to 10 days than they really are, because the dollar has moved so much in the last 6 months compared to when, some of these estimates were first written. Now, when we looked at estimates going back in November, they have barely budged, and the dollar is up, just on euro alone, more than 20%. So I think there is going to be some disappointment when it comes to reported results or the forward guidance coming from these companies, But frankly speaking, I think it has to do more with the cosmetics of it because of the dollar rather than the actual economics of the business.
So would you say, depending on what kind of results we get, that investors should, if there is a dollar impact, kind of disregard when it comes to thinking about kind of the valuation or the fundamental story at Apple?
See, from my side, yes, I've always looked at constant currency growth rate of different products. But remember, we are going into an era where we should see some slowdown in top-line growth for a lot of these companies, largely because of macroeconomic concerns. Now, so far, we have seen some pretty decent results from all tech companies that have reported so far. But I've been pleasantly surprised at it. But it has to U-turn, sometime or another, just because the overall global economy is at a much weaker place today than it was 12 months ago.
So where should we be looking? I mean, what I love about Apple earnings, Anurag, is that we actually get a somewhat good idea of geography. I mean, they don't break it down as much as I would like them to break it down, but we do look at it for sort of a barometer of the global consumer. So what should we expect, given that you say that the global consumer, the economy, is in a worse place than 12 months ago?
Yeah, so for me, I think Americas is going to be okay. I think Europe is going to be slightly weaker. And I think China is going to be weaker, not because of the consumer, but because of supply chain constraints. And I personally think that China is going to bounce back much more strongly over the next few months if the Chinese government is able to get the COVID problems under control.
That's so hard, though. I mean, we just read a story about China, sealing off the iPhone maker Foxconn in Shenzhen for 7 days to battle COVID. So it seems to be like a never-ending thing for China.
No, I mean, that's what I'm saying. It will take a few more months. I'm not saying it's going to happen overnight, but it's going to take some time. So I'm not saying this quarter, but as I look forward, I think structural changes for people buying phones in China are.
Hello, traders. How are you doing today? Hope you are doing fine. I'm placing an order. The other place to buy British pound, and I'm looking to buy at 120.49. It's quite close right now to actual price. So please, if you're looking to trade today, and if you're looking to trade British pound, here is your chance. 120.49. The price I'm looking to buy British pound. Okay. As soon as we will get filled, I'll let you know what I'm going to do next. You still have time, like I said. But if you want to trade on your own, get the strategy from companyeye.co.uk, and you'll find out how we trade and how much we invest, everything you need. It's all in the strategy. Okay? Stay safe. I'll speak to you later, guys.
This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right. It is Bloomberg Business Week.
All right.
All right.
Ed Ludlow is standing by. I see him. He's West Coast correspondent for Bloomberg News. He's going to be joining us from the San Francisco Bureau. We got a Tesla update.
I wonder if he ever gets any sleep, Ed Ludlow. I mean, I don't think Elon Musk ever gets any sleep, so I don't know if Ed does.
Yeah, probably not.
Yeah,
You got those notifications set for when he tweets, your phone goes off.
Going off at all hours. All right, we're going to talk about the latest on Elon and Tesla in just a moment. First up, though, back to your top business stories. And once again, Charlie Pellet.
Hey, thank you very much. We're looking at a down day, 28 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all declining. We've got Ed coming on. We're going to talk Tesla. Tesla shares down now by 1.7%. Ed also, no doubt, talking about Twitter. We've got Twitter shares down by 1.8%. Stocks pushing lower as traders brace for earnings from several tech bellwethers amid the threats of a hawkish Federal Reserve, scorching inflation, and a looming economic recession. Among some of the big tech names this week, Meta Platforms, parent of Facebook, down right now by 2.4%. Alphabet, parent of Google, down 1.1% today. Apple, it reports on Thursday, Apple shares down now by just about 1%. So the Dow, the S&P, and NASDAQ are all declining. S&P down 12, just about the worst.
Okay, traders, as you can see, position open for British pound at 120.49. All of you guys who decided to trade, well done. You're in, and already, as you can see, as soon as we fill this position, it moved up. Okay, it's great news. So stay with me, stick with me, and we'll close this trade in profit. Okay, for our strategy, please go to company.co.uk. Otherwise, just follow my trade, and if it will move about 10 pips or higher, we will place stop loss, and so on. We will just follow the trend. We will see how far and how much profit this trade will give us. Okay, I'll speak to you later, guys. Stay safe.
What we wanted to do with this target was signal that we do see upside between now and year end. We think there's a decent chance stocks bottomed in mid-June. And if they didn't, we think we could probably get that before the end of the third quarter.
And again, we do have the S&P down 14, down 0.4, 10-year yield 2.81%. And that is a Bloomberg Business Flash.
Charlie mentioned Meta, and I just want to point out Facebook co-founder Mark Zuckerberg selling his San Francisco house for $31 million, the most expensive home sale in the city this year, according to the San Francisco Chronicle.
Okay, he bought it back in 2012 for $10 million. Put a lot of money into it, though. 7,000 square feet, roughly.
Greenhouse, laundry room.
He's got houses in Hawaii, Silicon Valley. He's okay.
He's got somewhere to go.
Yeah.
Someone who always has a place to go is Elon Musk. He certainly keeps us on our toes. And among our most read on the Bloomberg today about Tesla increasing its capital expenditure plan by billions of dollars after CEO Elon Musk referred to the car maker's new factories as, quote, gigantic money furnaces. I love that.
Okay, you know what they say? You got to burn money to make money. Oh, wait, that's not really what they say, is it? Let's get into it with Ed Ludlow, West Coast correspondent at Bloomberg News. He joins us on camera from the San Francisco office for our audience worldwide. Okay, so Ed, I mean, how should we read into Tesla increasing its CapEx plan by so much money here?
Yeah, the biggest problem that Tesla's faced, and this was reinforced in earnings last week, reinforced in its quarterly regulatory filing, is that it's supply constrained. And when we use that term supply constrained, we mean that demand for its vehicles is more than it can currently build. You know, there's a lot of optimism around how well things are going at its factories globally. Elon Musk on the earnings call was talking about maybe even doing 40,000 vehicles a week across all its plants. But, there's a lesson that Tesla's learned in recent years as it's brought new factories online, is that it does take a lot of investment to get these plants firing on all cylinders.
You know, when we want to hear from CEOs what they're up to and what they're doing, I mean, I feel like when you hear from a CEO like Elon Musk that they're boosting CapEx, that to me is a positive sign. Or should we just think about it as it's just very Tesla-esque?
Yeah, I mean, the thing is that they're boosting it, but it was already pretty high, right? So they're boosting it in a range of $6 to $8 billion for this year and next year. The previous stated aim, which, you know, it's a target to spend that amount of money, which is something to be envious of, was $5 to $7 billion. So they've upgraded the range by about $1 billion. But as Tim said, it kind of goes back to that previous comment that they were burning cash, or they were cash furnaces, or however he put it. You know, that ultimately they are trying to get as quickly as they can to scale. And it's interesting because, you know, analysts on the earnings call, they want to know this kind of granular detail. And, and often he's not forthcoming with it, and you have to wait for the regulatory filing.
Hey, you know, when we think about capital expenditures by Tesla, Ed, how much of it do we think about, listen, this is a company that has had, in many ways, first mover advantage, really, when it comes to the burgeoning and growing EV market. How much of it is just making sure that he secures it and just continues to ramp up before everybody else does?
Yeah, they're definitely in investment mode. You have to remember the context that they're also going through a round of global layoffs, and those layoffs are centered around salaried non-production workers, right? So in other words, anyone that's actually building something, be it a car, be it batteries, those jobs are protected. And you're exactly right that Tesla is the market incumbent. It is trying to meet demand with factories in the markets where those vehicles are destined for. But a big part of that is scaling up staff, training, you know, working out kinks in the supply chain. You have to remember as well that they're investing in new ways of getting everything better. The thing about Elon Musk is he's obsessed with pennies on the cents on the dollar, right? He's constantly pushing his teams to make things more logical, more efficient, more, you know, boost the margin. But you have to invest up front to make that happen as well.
Hey, Ed, we got to go here. It's among the most read on the Bloomberg terminal. I opened up Twitter yesterday, and I just say, oh, no, here we go. So Elon Musk denying a report of having an affair with Sergey Brin's wife. This allegedly happening last fall/winter at a time when Elon Musk actually had 3 new babies.
So the Wall Street Journal reported, citing anonymous sources, that Elon Musk had an affair with Sergey Brin's wife last December. But the kind of other crux of the story was that Sergey Brin had asked his financial advisors to divest or sell off investments in Elon Musk-related companies, i.e. Tesla. Elon Musk tweeted over the weekend, I think I can say this on radio, but one of the things he said was, that's total BS. And then, you know, what's happened in the last 12 hours or so is that a known Tesla fan or Elon Musk fan has tweeted a photo which shows Elon Musk and Sergey Brin partying together. And Elon Musk replied to the photo that was tweeted and said, yes, this was taken about 24 hours ago. I haven't seen Sergey Brin's wife for a number of years, and he said some other stuff as well. So this is kind of the usual chaos that comes with covering the world's richest man.
Are you working for People magazine now?
It's a great question. You know, I've had a crazy reporting week, but I didn't think we'd be discussing this, put it that way.
That's why. I'm just saying, this is why we love covering Elon, and Ed does it so well. Ed Ludlow, thank you so much. West Coast correspondent at Bloomberg News, joining us on camera from our San Francisco office and bureau. So it's just, you know, keeping us on our toe. Shares of Tesla, it is a business story, down about 1.6% today.
Okay, guys, let's play stop loss at 120.51. It will give us £200 in profit. Just 1 second. Yep. Because 1 pip in our case equals £200. 2 pips will give us £200. Okay, let me change the color to, let's change to this one for new traders. And that's it. Please place stop loss for you for your trade. You had to calculate basically how much you want to invest when you start trading. Okay, and that's it. If it will move higher, we will increase our stop loss. Otherwise, we will close this trade with £200 in profit. Stay safe.
Pollsters say most Americans support these environmental goals. They just don't always agree on how to reach them. In Washington, I'm Amy Morris, Bloomberg Radio.
West Virginia Senator Joe Manchin says he has COVID and will need to work in isolation while he recovers from mild symptoms. An apology from Pope Francis in Canada to Indigenous communities for mistakes of the past.
Pido perdón humildemente por el mal que tantos cristianos cometieron contra los pueblos indígenas.
He said he's sorry Native children were forced to attend Christian schools from the 19th century until the 70s. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette. This is Bloomberg.
All right, Wendy, thank you so much. Carol Master, Tim Stanovic here at Bloomberg headquarters in our Bloomberg Interactive Brokers
Not
studio.
working remotely.
We are not working remotely. Why do you say that?
We haven't been. I just feel like, Fridays, Mondays, you don't see a lot of people on the trains.
Yeah, I noticed it because I
Tuesday, Wednesday, Thursday, you do. This is my anecdotal evidence. But we do have the terminal has a great tool that you can use to see who's going through the turnstiles.
Oh, yeah, that's right.
Yeah.
I have to say, and I tweeted this out, I filled up my gas tank over the weekend.
You did?
About 3/4 of a way, and I was blown away about how much cheaper it was than when I did it like 2 weeks ago.
Interesting.
Yeah. I
Tell the
feel
Biden
difference.
administration.
Okay, guys, as you can see, position closed. 120.51. We have 200 pounds in profit. Well done. All of you guys who decided to follow trade, who decided to stay with me and trade euro. British pound against United States dollar. We close this trade in profit. Okay, I'll speak to you later. Stay safe. Basically, this is what it's all about, day trading. You have to spot the right pair or index or any shares. We trade on margin, and you have to be at the right time when you place your trade. Okay? We never place on market price. We always place trade, and we're waiting until it will get filled. We never use button that buy at price market level. So that's why sometimes we have to wait for a while until it will get filled. Okay, that's good. See, as you can see, it moved lower, substantially lower. So for right now, for British pound, I'm not planning to trade. We have 200 pounds in profit. I'm looking closely to Japanese yen, to Bitcoin. What else? Euro, actually, maybe it will show us some potentials. Stay safe.
To get there.
Not worth it.
No.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session. The Dow now higher by 23 points, up by about 0.1%. Just a couple of minutes ago, the Dow had been lower. We've got the S&P little change, down 5 right now, down by about 0.1%. Nasdaq down 92, a decline there of 0.8%. So 13 minutes to go ahead of the close. Stocks are lower. Traders are bracing for earnings from several tech bellwethers this week amid the threats of a hawkish Fed, scorching inflation, and a looming economic recession. After the closing bell today, among the names we'll be hearing from, Whirlpool shares down 2.6%. NXP Semi, it is trading lower now by 0.9%. 10-year yield 2.81%. We've got spot gold down 0.6%, $17.18 the ounce, and West Texas Intermediate crude is up 2.2%, $96.77 a barrel on WTI. Bottom line here, stocks are mixed. S&P down 6, now down 0.2%. And that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. When a mob stormed the U.S. Capitol on January 6, 2021, Secret Service agents had several key roles, including defending the then vice president as protesters threatened his life. But when Congress told the Secret Service's parent agency to preserve all records related to the attack, apparently the message didn't get through. The Secret Service recently reported that most of its agents' texts from that day have been deleted. By law, federal agencies are required to save all such data. Perhaps some naive IT staffers blundered innocently, or maybe something worse was going on. The Department of Homeland Security has reportedly opened a criminal investigation into the matter. Whatever happened, the Secret Service owes Congress and the country some answers. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session, and we are getting ready to wrap up the Monday trade. It does feel like kind of holding our place, if you will, because we've got a Fed meeting this week. We've got mega big tech reporting, the names you know, like an Amazon, a Microsoft, an Alphabet, a Meta. Who am I leaving out? Microsoft.
Did you say Apple?
No, Apple. That's what
Thursday.
I was leaving out. I mean, there's just so much going on. And then there's this huge drop of important economic data points. Right now, that we are seeing a little bit of buying into the close. We've got the Dow in positive territory, but kind of little changes overall.
Yeah, volume down too. Let's get into it with Christopher Zook, the founder, chairman, and a chief investment officer at CAZ Investments, joining us on the phone from Houston. Christopher, good to have you with us. How are you? We're going to work to get Christopher back. In the meantime, let's get another check of what's happening in the markets right now as we get to the close. The NASDAQ, Carol, as you mentioned, down more than 0.6%. We're seeing tech take the brunt of it today, even though flat on the S&P.
Right, and you do wonder, are people just expecting maybe some negative tones or results from some of the big tech names? What is outperforming, once again, sound like a broken record, but energy is outperforming. It's up about 3.6%. If I take a look at the 11 major industry groups in the S&P 500, energy, once again, atop of it, followed by utilities, which are up more than 1%. Financials, up about 0.5%, and we will get that Fed decision. We are anticipating another 75 basis point increase, and so that does help certainly banks in terms of what they make. We always talk about net interest margin and so on and so forth, so that does help them out.
What a difference between the days leading up to this Fed decision, the days leading up to this Fed meeting, and what we saw last month, Carol.
I have to say, I know we talked about it being very anticipated. They are because of the commentary, and we do wonder, especially if you think about some of the Bloomberg stories that have been out there, some of the surveys that we've been doing of economists here at Bloomberg, where there is some expectation that maybe Jay Powell starts to be like, we maybe don't have to be so aggressive. So if we do hear that switch, that would be pretty significant.
What if we don't, though?
What if we don't? Then
What if we don't? What if we don't hear that? Because
I think we're okay with it.
Really?
I think if he just says, he's going to say we're going to look at each data point.
Yeah, we're data dependent.
Yeah.
We'll change our minds if the data changes.
Right. And, if he doesn't say we're not quite ready to say whether we can be less aggressive or whether we need to be more aggressive, we're just, I don't know.
Remember, if there's a surprise, that's what gets markets moving.
But what would be a surprise? A surprise to me
would be 50 basis points.
Yeah.
And then a surprise would be signaling that they're going to hike rates by another 75% at the next meeting.
But there's actual action versus what they say.
Yeah,
right?
exactly.
So I think it's pretty expected in terms of the market sentiment and what we've been seeing. If you look at some of the market metrics, is that 75 basis points is pretty expected. But you're right. Like if he says, you know what, we're going to need to be more aggressive, which I'm doubtful that we will, or whether he tips his hat and says, you know what, we're starting to see some weakness. We are. Right?
Yeah. Well, let's get into it with Christopher Zook. We got him back on the phone, founder and chairman and chief investment officer at CAZ Investments. Joining us on the phone from Houston. Christopher, how are you?
I'm doing well. Can you hear me now?
We got you now. We're excited
I feel like a cell phone commercial. We'll leave it at that.
Yeah, that sounds good. Always makes you think of that too.
Having me on.
Yeah, thanks for joining us. So you heard Carol and I talking just now a little bit about what we anticipate from the Federal Reserve this week. We also got earnings happening this week too. What's more important, what we hear from Fed Chairman Jay Powell or what we hear from Meta, Alphabet, the parent company of Google, of course, and Apple and more?
I think right now it's going to be much more important what we hear from companies because unless the Federal Reserve says something completely out of the expectations of what people have been looking for, it's literally kind of old news. We're going to get 75 basis points. If they do 100, that will obviously take precedent. But other than that, it's going to be really what happens with earnings because that has people on pins and needles right now.
So tell us a little bit about your firm in terms of what you do and what the investment environment maybe tells you about kind of our macro situation.
No, a little bit about the firm. We basically are investors of our own capital, and then we invite investment advisors and their clients to come alongside of us in whatever it is that we're doing. And so we have the luxury of never having to invest ever. And at the same time, we can invest in anything, anywhere, anytime, which means that we have a full reign to go wherever the opportunity set is. Today, what the opportunity is showing us is that this market is beginning to price in a recession. We have seen the valuation compression that one would expect. And now what we're looking at is when the earnings decline happens, what we refer to as the double punch to the gut, will we have that, that real second leg down, which we think is very possible as the earnings have to be, valuations have to be accounting for those lower earnings.
Hey, Chris, you guys look at private equity deals specifically, correct? And
we do everything, public markets and private.
Okay, so in terms of the public market side of it or even the private market side of it, it's been gangbusters, or it was certainly prior to this year and certainly the first quarter. You say the market's already beginning to price in a recession. So does that mean we're getting to the bottom of that and that we're starting to see more optimism come back, or we're not quite there yet?
No, I think we're not quite there yet. And I'll tell you the main reason why is that we have not seen the capitulation. There was one article over the weekend that y'all ran that talked about a major Wall Street firm saying the capitulation has already happened. Maybe from a short-term perspective, it got a little bit too negative in June, but the reality is that no, the average investor is not capitulated. They have just now begun to feel afraid enough to go, oh, the market's bouncing, I feel a little bit better, and then if we start to sell off again, that's when you could see some real whoosh or panic that could occur. If one looks at the similarities right now between 2008 and 2009 and 2022 and potentially 23, they're a little eerie. Now, we hopefully are not going to have a Lehman-type event that occurs, but it's very plausible that this market grinds lower until we see some kind of a catalyst that causes everybody to kind of, quote-unquote, give up the ghost And at that point in time, we're going to put in a major bottom. But valuations have got to be a lot lower than they are today in order for that to occur.
We only got a little bit of time, 10 seconds. What would one of those catalysts be?
Catalyst on the negative side would be a credit crisis where we have people that are over-levered that just cannot fund it, and it starts to create contagion. That's what we'd be most concerned about.
But you think that's likely? 5 seconds.
It's very plausible. There's definitely room for that to happen in the fall or as we get into the spring.
Well, it plays into some of what we heard from Nouriel Roubini earlier on Bloomberg. Hey, listen, we got to run. Chris, thanks so much. Christopher Zook, founder, chairman, and chief investment officer of the registered investment advisor, Kaz Investments, joining us on the phone in Houston, Texas. All right, folks, time to head over to our Bloomberg TV colleagues for Beyond the Bell, our simulcast on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Katie Greifeld, Gina Martin-Adams in for Taylor Riggs. As we count you down to the closing bell, we take you beyond it, beyond the bell with our global simulcast. Carol Massa, Tim Stenovic. And once again, we go cross-platform TV, radio, YouTube to dissect actually, these worries about recession, worries about a Fed. And in fact, we have President Biden speaking, as he still does have COVID, saying he doesn't think the U.S. will see a recession. Now, is that a technical recession? Is that because we actually still see that there's some income spending and disposable income among the consumer? Because we know here in the U.S., they actually don't mark a recession by just 2 periods of contracting.
Thank you, Caroline. I mean, I don't know how many times I just want to retweet politicians who are saying that, 2 quarters in a row of negative GDP growth is a recession. That's not how the NBER defines it here in the U.S.
But does it matter, Tim, truly, at the end of the day, when you think about the grand scope of life, does it matter what the NBER says?
National Bureau of Economic Research is the ones who said that it says it's a recession or not.
What? Yeah, but in the end, they always say it too late. We're already well into recession by the time they date the recession. The market is already rebounding. I mean, I completely agree.
Thank you.
It doesn't matter when the NBER says it's recession.
Well, okay.
Frankly, we need to know.
So what about the other part of this, Gina? Do you consider a technical recession to be 2 consecutive quarters of negative GDP?
No, I do not.
Okay, good.
I do not.
Good.
But
good.
Nonetheless, what I really care about is where stock prices are going, and whether or not we're in recession is kind of a meaningless argument.
Right. And I think that's what the White House. That's what the White House is pushing back on right now.
Europe still thinks it's a technical recession. The UK still thinks it's a technical recession. Why does the US decide that it's going out all on its own to defy what we've all learned in economics for however many years, and now wants to start grasping at other stories?
We got to have the NBER. This is really in support of the NBER. In the end, we need to have those.
I believe Bloomberg News defined them as a group of, quote, eggheads who are defining it recently.
Do you identify as an egghead, Tim?
I wish. I'm aspirationally an egghead.
Meanwhile, the S&P 500, we were so taken with President Biden's views of recession or not, is the S&P 500 actually turned into the green in the last minute, up 5 points. We're up 0.1%, 3,966. The NASDAQ, though, didn't manage to get a wiggle on into the green, but we did come off of our lows at least, down 51 points. That's 0.4% lower. Dow Jones Industrial Average did manage to post 90 points in the green, up 0.3%. So a little bit of buying into the end. And let's have a look at what happened on the Russell 2000, because small caps, Carol, also were pretty much higher on most of the trading day and managed to be your outperformer of choice.
Yeah, and some would say that's, we're watching that sector very closely to see, certainly maybe as a leading indicator of, recession, no recession, or whether or not we're coming out of kind of the economic downturn, Gina.
Yeah, and if we are headed into recession, it's presumably going to be led by the consumer weakness, and you can see that play out in the market today. Certainly the consumer stocks all on the loss-leading segment, with the autos, the consumer services, the retailers all at the bottom. Tech companies kind of smattered in there in the red as well, as we get nervous about the earnings outlook coming. But still at the top of the leaderboard, the energy and utilities companies really leveraging that commodity price gain that we've seen today, as well as perhaps the dollar weakness, which has kind of come out of nowhere for the last couple of weeks.
Yeah, Anurag Rana talking about dollar weakness. That's one of the things that's certainly top of mind when Apple reports this week. All right, so gainers. Here's what I got for you guys. Shanali Bosick talked about this last week. We're talking about SVB Financial Group. Really sold off big time on Friday. This is a bank that's entrenched in the Silicon Valley space. Well, it was an outperformer today, up more than 8%, top in the S&P 500, active volume. Maxim Group, I think, Katie, you talked about this earlier. Maxim Group reiterating its buy rating. It said the stock still looks attractive despite a sizable miss on those second quarter earnings last week. Another name, top in the NASDAQ 100, ticker is ISRG, Intuitive Surgical, up about 3.5%. This is despite 10 analysts, at least 10 analysts, cutting their price targets by an average of 12% today. No analysts raised their price targets, and this is after, keep in mind, the company did report their earnings last Thursday, July 21st, and that missed on both the top and the bottom line. One more, I think you guys also mentioned this earlier, World Wrestling Entertainment up about 8.5%, rallying as it was upgraded to buy from hold at Loop Capital Markets, which says there's a greater likelihood that the company is sold with wrestler promoter Vince McMahon retiring. And of course, he founded the company. Maybe that's the one you talked about, Katie, earlier.
That was it, yes. Yeah. All about wrestling.
It is all about wrestling, is it not? All right, Tim, what do you got?
It's also all about gold, and inflation is hitting gold. We got Newmont Corporation, the world's top gold producer, down 13.2% today, having its worst day since 2008. At one point in the day, it fell the most since 1997. High labor costs, energy costs, and lower ore quality dragging down earnings for the company. Weber, we got to check back in with Weber, down 12.7% today. It fell as much as 23% earlier in the day. That was its worst intraday decline since its August IPO. This after the grill maker withdrew its fiscal year net sales and adjusted EBITDA guidance, and also announced the departure of its CEO. And NVIDIA shares falling by 1.7%. We got a price target cut from Barclays from $295 down to $200. We, by the way, do not get NVIDIA earnings until August 24th, so we're going to have to wait to hear from the company on how it's doing.
Yeah, getting NXP instead, which another little tell on semiconductors. And I think it's interesting what you said about Weber, because when you dig into the numbers, or indeed their earnings statement, they are saying a lot about, well, the lack of clarity they got about a consumer who is facing inflationary pressures at the moment, Tim. And I look at the commodity spectrum, and in the global macro movers, you are seeing that inflationary pressure on the oil side once again. Now, it's not at the elevated levels that we've seen previously, but we're still back at $96 overall on WTI crude. Brent is above 100, 105. And once again, natural gas going up 5-6%, let's call it, in the US. Significant moves, up 10-11% over in Europe, as we fearful of what happens with Russia and Ukraine, with the Nord Stream, whether or not we will see a curtailment in gas supplies over into Europe, and what that means once again about supply chains and indeed energy crises over there. And we're looking more broadly at what's happening therefore in the currency spectrum. That reflects the move higher in oil, Canadian dollar strengthening 0.6%, the loonie therefore up. Norwegian krone, another key oil play here, up more than a percentage point. And overall, we haven't seen a desperate search for a haven. We haven't seen the move into the yen. That's weakening by 0.4%. Interestingly, the Aussie dollar strengthening up about 0.5%. That as we see metals get a push higher, maybe that's to do with China and potentially reports of some support, at least from the government, for their real estate sector. And I'm looking at sovereign bonds, which actually, if you looked at Europe, if you looked at Asia, was a bid into the bond market. You saw yields actually come down, but not so here in the US, Katie.
Not at all, and you saw no search for havens in the U.S. Treasury market, like you just said. If you look at yields, really, it was a sell-off across the curve. You saw 2-year yields up almost 6 basis points. You saw even more so on the long end of the curve. Of course, this is coming ahead of a very important Fed meetings. I don't know if you guys heard, it's on Wednesday. But, you know, we did see a big bid into bonds over the last few weeks. So maybe people are just adjusting their positions a little bit heading into the Fed. But in any case, a big sell-off in bonds today.
And maybe there's an adjustment going on. I mean, Gina covers this, you know, on an ongoing basis in terms of adjustment about what we expect in terms of earnings. Take a look at Whirlpool. This one's been bouncing around in the after hours. It was down 4%. Now it's up 1%. Here's what it says when it comes to outlook. It sees the fiscal year ongoing EPS between $22 and $24 a share. So reining that in a little bit, it had seen 24 to 26. The estimate that's out there is $23.91. And it's interesting, if I take a look, Caroline, at the second quarter net sales were a little light, and second quarter ongoing EPS, that though was an outperformance.
The thing here is that they downgraded last time.
Yeah.
In their previous quarter, they already downgraded their outlook for the year. They'd already been worrying about inflationary pressures. They'd already been worrying about, well, perhaps a slowdown in the consumer overall. So no wonder this is a concern if we're going to have yet another cut to their full year ongoing earnings per share forecast this time. This is a company that's just trying to get some sort of clarity on the consumer demand, and indeed as a housing market rolls over.
I would say look no further than the title of the headline on the company's press release right now. Whirlpool reports Q2 Q2 results delivers in a, quote, challenging environment. The company in a statement is saying, quote, moreover, long-term fundamentals of demand remain strong, and we continue to progress our portfolio transformation to position ourselves to drive long-term value, Gina.
You have to wonder if that's why the stock isn't reacting at least moderately positive to the figures, as the company is exhibiting some degree of confidence in the outlook. Yes, there are still these challenges, as Caroline alluded to. It's continuous. Every quarter we hear about these challenges in terms of cost, and yet demand is still somewhat intact, and that's got to give the market a little bit of confidence that maybe the consumer isn't completely giving up the ghost here.
And wrapping the micro into the macro, I mean, you have to wonder how resilient that consumer can remain and for how long in this environment of super hot inflation and a Federal Reserve that's just determined to crush it. And how do you crush it? You have to hit demand.
I'm looking just more in the Whirlpool numbers, and it's interesting how poor Europe has been. Of course, this is a company that had to exit Russia in particular. They say in Europe, demand was negatively impacted by the war in Ukraine. Revenue decline really falling 10% there. But interestingly, in the US, they're able to have cost-based pricing actions that helped with industry volumes. They were down 6%, but said they were largely offset by some cost-based changes that they made. But Asia as well, revenue, they said, increased driven by strong volume growth compared to the prior year's COVID-related shutdowns in India. So this is a company that just has such a global perspective. And indeed, it looks like for now, they had a bit of pricing power in the US.
Yeah, and it's interesting just to watch the stock reaction because they've been down, they've been up, and right now they're pretty flat. So investors trying to make sense of kind of all of these data points that they're throwing at us at this point. All right, lots of data points coming throughout the week, including big tech earnings and, of course, the Fed meeting and some economic data points. So we'll have lots to cover. But for this Monday Beyond the Bell, that's a wrap, everybody. Our cross-platform coverage on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You know, it's interesting. Right now, Whirlpool, I just want to stay with that for a moment. It's up about 1.6%, but the chairman and chief executive, Mark Blitzer of Whirlpool, saying, moreover, long-term fundamentals of demand remain strong. We continue to progress our portfolio transformation to position ourselves to drive long-term value, but saying demand remains strong. So you want to know what's going on. Yeah, exactly. So why is it, anyway, the stock is up after hours.
All right, let's get world and national news. For that, we turn to Wendy Gillette in the Bloomberg 1130 newsroom here in New York. Hey, Wendy.
Good afternoon. The White House took a lot of blame when gas hit $5 a gallon. It's now hoping to get some credit for a price drop to $4.36. Bloomberg's Irv Chapman reports from Washington.
The release of oil from the government's strategic reserve had an impact, Kevin Book of Clearview Energy Partners said in a Bloomberg interview.
You can't release 100 and some million barrels of crude oil, not have a price effect. What changed? The answer is demand. Also, refineries running flat out. Demand lightens and refineries are running flat out. Then you get some balances in those inventories.
But the price at the pump could rise again, Book said, if demand grows, refineries hit a snag, and/or sanctions further tighten supplies from Russia. In Washington, Irv Chapman, Bloomberg Radio.
There will be dueling appearances in Washington this week between two former political allies turned potential opponents in the 2024 presidential race. Former Vice President Pence speaks at the Heritage Foundation this evening, a day before former President Trump speaks at a conference aligned with his America First policy agenda. Bloomberg Government's Emily Wilkins has more.
His speech is going to be more focused on policy, which is something we're hearing Pence talk a lot about. He's also a potential contender for 2024. It'll be really interesting to see how he both kind of differentiates himself from Trump while sticking to Trump as, of course, his former vice president.
BGov's Emily Wilkins in Washington. And Mega Millions, mega massive right now. The drawing is tomorrow night for the $810 million jackpot. How's that breakdown? Cash option, $470 million. $112 million would go to Uncle Sam. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette.
All right, Wendy, thank you so much. Carol Masser along with Tim Stenovic. And so, hybrid work.
Yeah, turns out that it's actually reducing attrition, at least according to one new study.
That's true. Hybrid work reduced attrition rates at a large technology firm by 35%. It also improved self-reported work satisfaction scores with no negative impact on performance ratings or promotions. This is according to a new study co-authored by Nicholas Bloom of Stanford University. Heard of them?
Okay, so after the explosion of remote work during the pandemic, many companies have now adopted hybrid work arrangements for their employees. It typically involves working 2 or 3 days a week at the office and the rest at home, allowing employees to split tasks best done in person and those best done individually.
This is funny. You know, with the unemployment rate, we know, right? We talk about this all the time, near its lowest level in 5 decades. Even some of the staunchest critics of work from home have changed their tune to attract and retain employees. The randomized controlled trial of about 1,600 engineers, marketing, and finance employees, it took place in 2021 and 2022 at the global travel agent Trip.com. Those born on an odd number date, say June 3rd, had the option to work from home on Wednesdays and Fridays. Others had to work in the office full time.
That's how they did it?
It's like
Rude.
yeah, exactly. You got to be in. You get to go home. Following the study, Chip.com rolled out hybrid work to the entire company. The paper was co-authored by Bloom and a few other people at Stanford.
Okay, this is a really interesting study. But I'm not too surprised here, right? Flexibility is certainly key when it comes to, I think, certain people in certain industries. But Carol, I have to say, we're in an environment where, you know, the job market is pretty tight right now. The unemployment rate is low. What happens when things shift and when we don't see how, companies have the same power, or we should say employees have the same power they have now?
Bosses around the world, I hope you're listening. The study found no impact from work from home on performance reviews or promotions overall or any individual subgroup. However, those with the option to work from home reported slightly higher productivity.
Okay.
There was also, an 8% increase in lines of code written by that group compared to in-office
It's just
employees.
one study, though, right? One company in one industry.
That does not make a trend?
I don't think so.
Anyway, it's an interesting and some food for thought. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Plenty of earnings after the bell. NXP Semi is forecasting revenue for the third quarter, and that guidance did beat the average analyst estimate. Right now, though, we do have shares trading little changed in NXP. Also reporting earnings after the closing bell. As we told you, Whirlpool cut its ongoing earnings per share forecast for the full year, but shares are up after hours by roughly 2%. The company says its GAAP loss per diluted shares was largely driven by a loss from the sale of its Russia business. So again, Whirlpool reporting after hours, and that stock up now by just about 2%. Turned out to be an up day today for the Dow, higher by about 91 points, up 0.3%. The S&P gained 5 right at the close. We had NASDAQ down 51, drop there of 0.4%. Was a whipsaw session, though. Traders are bracing for earnings from several big tech companies, along with the threats of a hawkish Federal Reserve. 10-year yield 2.80%, the 2-year yield 3.02%. Spot gold down 0.5%, 17.18 the ounce, while West Texas Intermediate crude up 2.1%, 96.73 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to mention, crossing the Bloomberg terminal, Walmart lowering its profit outlook for the second quarter in 2023, and this stock is down about 7.2% in the after hours. You know, when it comes to retail, this is one of the big ones we watch, and this plays into a much more mainstream consumer, if you will, and we are seeing other retail names go lower as a result.
Yeah, Target specifically dropping 4% after Walmart lowering its profit outlook. The company, Walmart that is, seeing second quarter operating margin expected to be about 4.2%. Net sales, including second quarter FX headwind, about $1 billion, Carol.
Yeah, so this is a big deal. When we want to know what's going on with the consumer space, this one tells us a lot. All right, we'll continue to track this and give you some more details as it is known. In the meantime, one of the things that we're watching, we want to get an idea of how the consumer is doing. Walmart plays into that. We're also kind of watching very, very closely what's going on when it comes to the job space. And one of the areas where we are seeing a really tough going is in the healthcare space. And I remember just last week there was a Bloomberg story out about nursing burnout hitting a new high as the latest Omicron variant surges. And our next guest knows a lot about the healthcare space.
Yeah, we're talking to Todd Walrath, the Chief Executive Officer of ShiftMed. It's a healthcare staffing platform. Todd joining us this afternoon from McLean, Virginia. Todd, how are you?
Great. Thanks for having me.
Yeah, thanks so much for joining us. Really appreciate it. You know, we've been covering this for the last 2.5 years as we've seen this just exacerbated during the COVID pandemic, but it's really something that continues right now. What are the numbers that you can share with us that show how dire the situation is when it comes to staffing for nurses?
Yeah, on the surface, it's a little bleak. 1 in 5 nurses has left the workforce during the last 2 years, so that's 20% of the nursing inventory coming out of the market. You have about 2 million job openings right now for nurses. That's expected to increase to about 3.2 million by 2026, so just about 3 years from now, seeing a more than 50% increase. And then our research is telling us in our last State of Nursing survey that goes out, we do that annually, 48% of nurses are considering leaving the field in the next 2 years.
Todd, is the system broken when it comes to nursing specifically? I mean, not talking about bigger picture healthcare, but nursing specifically, because there are those stories that come out, you know, month after month of nurses being able to make more if they're, you know, traveling nurses after quitting their full-time job, and in some cases getting hired back as temporary positions just for higher pay.
Yeah, I mean, I think, you know, we've built ShiftMed to really address the flexibility aspect of work for the healthcare professional. We have 100,000 professionals on our platform, and they, you know, the power has really shifted from the healthcare provider kind of dictating the schedule, the location of work, the pay of work. We're taking more of a marketplace approach to that and offering the selection to the worker so they can really put together their perfect schedule, the locations that they're interested, even the segment of healthcare that they work in.
Tell us about the growth in your platform and what you've been seeing. I am curious about, you know, people coming into the platform. What's the kind of volume you're seeing?
Yeah, it's pretty impressive. We're getting about 10,000 downloads of our app per week. We hired 31,000 W-2 workers since January 1st, so pretty substantial increase in the total number of workers on our platform. And if you think about kind of what's going on at the macro sense, nurses like managing their work schedule on a mobile app. They can have all their digital credentials that live there in the cloud. They can now work at 1,500 hospitals on our network across the country in 100 cities, and they can pick the perfect schedule if they want to work 3 doubles and have time off with their family in the second part of the week, if they want to work hard for 6 months and take a couple months off and travel or be with family. That's the kind of flexibility they're seeking that I think the traditional, employer-employee relationship has been lacking for the previous years in the healthcare setting.
Well, when you say healthcare setting, we're talking about many different settings out there. We're not just talking about primary care or hospitals, but also nursing homes. What are the differences that you're seeing in those different areas?
Well, you're seeing a sea change just across healthcare. In 2010, 10% of the workers in a health system might be considered contingent workers or part-time workers. Now that number is between 20 and 25%. Internationally, it's 40%. So I think in some respects, the U.S. is catching up with our partners in more mature markets, maybe internationally. The post-acute segment has been the biggest adopter of this contingent labor. You're seeing many players cater to that segment. And it's a much more transactional, people are staying in a skilled nursing facility or an assisted living in a different cadence than maybe they would stay in an acute hospital. And it's a very regulated segment. So for every patient that you see in a skilled nursing facility, those operators have to provide between 2.5 and 3 hours of individualized patient care per day. So they need a lot of labor to satisfy, think of a 200 or 300 bed nursing facility. That's a lot of labor coming in the door every single day.
Yeah, anybody I talk to, though, just talks about the demand, certainly in this space. Hey, Todd, thank you so much. Todd Walworth, he's the founder and CEO of ShiftMed, joining us via Zoom from McLean, Virginia. Just want to mention Walmart just one more time because it is down about 6.6% here in the after hours. And the big headline, this is the company lowering its profit outlook for the second quarter in 2023. It did also say it's encouraged by the start on school supplies in Walmart U.S., but they did also point out that apparel in Walmart U.S. requiring more markdown dollars.
Yeah, Walmart says net sales, including second quarter FX headwind, about $1 billion.
Yeah, this is certainly going to be a name we're going to be talking about into the Tuesday trade. You are listening and watching Bloomberg Business Week.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Monday. Lots going on. It's going to be a busy week. We're watching Walmart shares in the after hours down about 8%. That's a big one.
It is a big one, and it's having an effect on other retailers, too. At last check, Target shares were moving lower in the after hours now as a result. It's a bellwether for the American consumer.
It's huge. It's huge. And I do wonder if the economy is slowing down, what does that mean for people who are trying to get ahead? We're going to talk about relationships and social networking. We'll get to that in just a moment.
First up, though, Charlie Pell, lots of news in the after hours. Where do we start?
We got it covered. Got to begin with Walmart, member of the Dow Jones Industrial Average right now. We have got Walmart down 8% after hours. The headline that Carol brought us just about 10 minutes ago, Walmart cutting its sales and earnings guidance for the second quarter and full year, citing the need to lower prices to clear out bloated inventories. Again, Walmart after hours dropping now by 8%. Developing story, one we're watching for you after hours. Whirlpool has cut its full year earnings forecast less than feared. Shares, though, after hours are up by 2.6%. Stocks whipsawed today as traders brace for earnings from several tech bellwethers amid the threats of a hawkish Federal Reserve, scorching inflation, and a looming economic recession. Today, the Dow advanced 91 points, up by about 0.3%. S&P up 5, up 0.1. NASDAQ down 51, a drop of 0.4%. 10-year yield 2.79%. Two-year yield 3.01%. Spot gold 17.18 the ounce, while West Texas Intermediate crude today up 2%, 96.62 for a barrel of WTI. So lots of forces pulling investors, but what is more important, earnings or the Federal Reserve? That question for Christopher Zook, Chief Investment Officer of CAZ Investments, who is a guest right here on Bloomberg Business Week.
Unless the Federal Reserve says something completely out of the expectations of what people have been looking for, it's literally kind of old news. We're going to get 75 basis points. If they do 100, that will obviously take precedent. But other than that, it's going to be really what happens with earnings, because that has people on pins and needles right now.
Well, again, the big story after hours, Walmart cutting its sales and earnings guidance for the second quarter and full year. Walmart after hours plunging now by 8.5%. Recapping, S&P in a seesaw session up 5 points higher by 0.1%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, last fall we caught up with the co-founders of the nonprofit Boss Blue, which welcomes women from all walks of life to be a part of a social networking membership club without the steep fees. So it's a really nice twist on how we do it. Sorry, it's a Monday.
It's good to have back with us Natasha Hildebrand, the co-founder of Bass Blue, joining us once again, this time on the phone from Los Angeles. Natasha, great to have you back with us. How are you?
Hi, Tim. Great to be back. Nice to be here.
Yeah, well, we've got some big news from you guys. The Bass Blue Foundation has a goal of $2 million, and now you've raised $600,000 toward the goal. Give us an update on what that fundraising was like in a time where, if we look at the markets right now, there's just so much uncertainty out there.
Yeah, I mean, it was, I'm not going to lie, it took us some time, but also it was amazing to actually have the space open. Really, nothing does it better than kind of showing off the amazing individuals that are in there connecting, growing. We hosted something called Founders and Funders just a few months ago. We were actually able to provide grants and checks to women entrepreneurs in the space. And I think kind of showing that off and showing what we're literally doing on a daily basis and the impact we're driving made it very tangible for a lot of our partners, from Total Healthcare to the Ralph Wilson Foundation, and they could see the real impact where their money will go as we continue to raise.
Natasha, how do you think about impact and success?
Oh, man. Well, we really drilled it down to kind of three key areas. It's between access, incubate, and grow. And so access is really by providing those opportunities. How many opportunities can we bring to the table for women, whether that's through kind of education or through different speakers coming in, through capital, as you can see. Incubate, how do we really help individuals grow and start businesses, kind of going from that early stage to that stage, 0.5, if you will, is really difficult. So how many women can we really help drive and get to that 0.5 stage, if you will? And lastly, growth being, how do we develop careers? Once you've gotten to a certain level as an executive, doesn't mean you stop growing. What kind of leadership training, D&I training, all those different elements that, really drive your independent success, but also overall success for women.
Okay, so you opened this up during the pandemic. We're still in the pandemic right now. If I go to your website, we see pictures of women in masks in what I assume is with the doors open. And I'm wondering how you do this during a pandemic, how you get people back together at a time where I think still people are, thinking about, okay, Zoom is the way we're doing this, at least, when we see spikes in cases.
Yeah, I think people want to get together. They've been ready to gather. And, we opened in October. We definitely were masked for a while. And, we've gone through that yo-yo as the rest of the country has. But people are really looking to gather now. And we found that everybody is doing it so safely. We have a COVID policy or a vaccination policy at the space. And people are adhering to it and really ready to just, be together and connect. We also do have a lot of outdoor spaces that our members can take advantage of. We do outdoor events as well.
Yes, it's amazing when you create the space, right, and the opportunity for this to happen. And I do think about, Natasha, like when you think about there are connections and then there are connections. So what connections and relationships can be game-changing or life-changing for someone?
Well, I think it's people that are there consistently, right? To your point, you can have that one-off, and where, sure, they can give you that job and advice that you hold in your back of your pocket for the rest of your life, and so of course that makes a difference. But the people and I think the relationships that really actually carry through are the ones where they show up again and again. And I think that happens on both sides. We try to, meaning like if we're talking about a mentor-mentee, whether that goes up, down, left, right, whatever might have you, it's showing up in a way where you can say, hey, I'm popping up every 6 months. We facilitate that through mentorship circles and mentor matching as well. So we've got folks in the team that will say, oh, you know what, we've heard that you guys haven't connected in a while. I just wanted to bring you back together again and again. And so we do that constantly because it is that consistency that really allows that growth and change. I think that impact, that will help you really grow in the future.
All right, we're going to leave it there. Hey, Natasha, thank you so much, and definitely do stay in touch. Natasha Hildebrandt, she's co-founder of Boss Blue, joining us on the phone from Los Angeles. Do want to get back to the Walmart because it is down 8.4% in the after the company cut its guidance for the second quarter and for the full year.
Yeah, we're also seeing shares of Target move lower in the after hours. Amazon move lower in the after hours as well. Carol, operating income falling 13 to 14% for the quarter and 11% to 13% for the full year. The company expects comp sales, excluding fuel, though, to rise about 6% for the second quarter.
And that's interesting. That 6% for the second quarter is due to a higher than expected number because of, quote, a heavier mix of food and consumables, which is negatively affecting the gross margin rate. So everything's costing higher, but it's also costing them a lot more, right?
Yeah, look closely at tomorrow's trade because this is a story that's just going to ripple across. I can already tell.
Well, and they also said part of the reason that they're cutting that guidance is the need to lower prices to clear out bloated inventories, which we are hearing certainly from retail. That stock right now down 8.4%. in the aftermarket.
All right, let's get a check on the latest world and national news with Wendy Gillette in the Bloomberg 1130 newsroom here in New York. Hey, Wendy.
Hey, actor Paul Sorvino, famous for his roles in Goodfellas and Law & Order, has died. He was 83 years old. A woman opened fire at Love Field Airport in Dallas before she was shot by an officer. Police say the 37-year-old woman fired towards the ceiling. Police Chief Eddie Garcia.
There was several rounds that are found. Simultaneously, as she's doing that, our officer engages the suspect, strikes her in the lower extremities. She's taken into custody and is currently at Parkland Hospital.
Chief Eddie Garcia says her motive is unclear. The FAA halted flights at the airport this afternoon. Congress is getting an update on the situation in Ukraine this week. Details from Bloomberg's Amy Morris in Washington.
Lawmakers in the House and Senate will get separate classified briefings on Wednesday afternoon. The U.S. has delivered a dozen defense systems and approved 4 more in a new $270 million military aid package, including as many as 580 additional anti-armor reconnaissance drones. Meanwhile, the Pentagon is looking into the feasibility of providing fighter jets to Ukraine, although that effort is in its very early stages. In Washington, I'm Amy Morris, Bloomberg Radio.
The Pope has apologized in Canada for the Catholic Church's cooperation with the country's policy of Indigenous residential schools, speaking through a translator.
The first step
of my penitential pilgrimage among you is that of again asking forgiveness, of telling you once more that I am deeply sorry.
The Pope will spend a week in Canada. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Wendy Gillette. This is Bloomberg.
All right, Wendy, thank you so much. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Brokers studio. So top of mind, top story right now is Walmart, because the stock's down 8.7% in the after hours after the company cut its sales and earnings guidance for the second quarter and full year, citing the need to lower prices to clear out bloated inventories.
All right, let's go through some numbers here, Carol. Operating income will fall 13 to 14% for the quarter and 11 to 13% for the full year. The company expects comp sales, excluding fuel, to rise about 6% for the second quarter, a higher than expected number because of a, quote, heavier mix of food and consumables, which is negatively affecting gross margin rate.
You know, it's interesting, too, and I'm looking at our Markets Live blog. They say the surprise cut in Walmart's profit outlook and expectations for an FX headwind, which they also talked about, sent shares of the retail giant tumbling after the close, as we mentioned, down 8, almost 9% here as we speak. It's overwhelming some earlier positive signals in Monday's post-market earnings reports, and it did feel like there might have been maybe some optimism growing maybe in terms of overall earnings, but this is a big one.
Yeah, it is. Lisa kind of rounded up with some other stuff going on, Carol. In the chip sector, NXP Semi forecast better than expected revenue, and had customer demand within auto and industrial and Internet of Things. Market continued to top incrementally improving supply. And then the CEO of the appliance maker Whirlpool saying that long-term demand fundamentals remain strong. So even though in the quarter net sales dropped. So we're getting a couple different signals here, right? A big signal from Walmart, which is causing shares of Amazon and Target to move lower in the after hours. But at the same time, you know, hearing from other companies that are saying, well, we're actually doing okay in the face of these challenges.
Well, and it's interesting. They did talk about, in terms of currency rates and a currency impact, that stronger dollar, we've talked about it. They expect a $1.8 billion headwind in the second half based on current FX rates, and that really does have to deal with the stronger dollar.
Watch Microsoft tomorrow, because it was 3 months ago that Microsoft warned us of a stronger dollar hurting them.
Yeah, exactly, right. We're seeing, you know, anybody...
And we hear from Microsoft after hours tomorrow.
And any of these companies with this big, you know, global exposure, I mean, a lot they sell in the U.S., but internationally, you're talking about more than $100 billion. So that certainly has an impact. But the stock down in the after hours. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Walmart has cut its sales and earnings guidance for the second quarter and the full year, citing the need to lower prices to clear out bloated inventories. Walmart, after hours, down 8.5%. Not just Walmart, but other retailers as well. Target now, after hours, down by 5.9%. Amazon.com tumbling about 4.5%. Costco, after hours, down now by about 2.5%. Also reporting earnings today, we heard from Whirlpool. After the bell, it cut its full-year earnings forecast less than feared, sending shares higher in late trading, up by about 2.1%. It was a down day for NASDAQ, but an up day for the S&P and the Dow. Stocks whipsawed as traders braced for earnings from several big tech bellwethers amid the threats of a hawkish Federal Reserve. S&P up 5, up 1/10. The Dow up 91, up 3/10. NASDAQ down 51, a drop there of 0.4%. 10-year yield 2.80%. Spot gold down $8 the ounce to $17.19. Down by about 0.5%. West Texas Intermediate crude up 1.9%, 96.51 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, for years, Bloomberg News has been reporting on housing inequality. Fannie Mae has highlighted as well. They recently noted that how over the years, the inventory of affordable U.S. homes has declined sharply as home prices have dramatically risen. And as housing has become increasingly unaffordable, the shortage of safe and affordable homes is affecting more and more prospective home buyers every day. People keep getting squeezed out.
Yeah, one company trying to do what it can do to help fix that is Trident Builders. We got the company's president with us, Brendan McCluskey. He's the president of Trident Builders, joining us on Zoom from Baltimore. Bloomberg Philanthropies, we should note, is providing support for Trident's efforts. Bloomberg Philanthropies is the philanthropic arm of Bloomberg LP and the parent company of Bloomberg Radio. Brendan, it's great to have you. How are you?
Yeah, I'm doing great. Thanks for having me on.
Okay, so you create homes that are energy efficient, but also affordable. How do you do it in a place like Baltimore?
Yeah, well, so it's interesting. So right now we're actually building a project for the Smithsonian Institute that is Passive House certified. So basically you've got highly energy efficient homes that, with the addition of solar, are actually a net benefit to the climate, that they actually produce more energy over the course of the year than they actually consume. And our ambitions in Baltimore is to remove really the very worst of housing stock in these urban centers, these vacant properties that, you know, are falling apart. They're just laden with lead and asbestos and all sorts of other harmful chemicals. And basically just wipe that stuff out and build new housing stock for the 21st century, and to focus on the communities that need it the most.
Brendan, I love what you said about, focusing on how to build housing for the 21st century. We have to rethink the model that currently exists that really kind of puts home ownership out of the range of so many Americans.
Yeah, absolutely. And but that's what our missions are exactly. So the program that we're looking to employ is something that was actually perfected over the last 4 decades in Cleveland. It's called the Cleveland Housing Network. And we're able to leverage, the 4% LIHTC tax credit, basically put these people into a 15-year program where they get the peripheral supports from like the Bloomberg Philanthropies and the Living Classrooms, all these great philanthropic organizations that kind of round out the soft skills and help stabilize these communities and the challenges that they have. And what we do is we find a market-driven solution, like a market solution for the housing problem. That itself is stabilized, but then we lean on philanthropic organizations to kind of round out the balance of workforce development, food security, housing, like trauma and therapy, mental health, all the various things that are afflicting these challenged communities.
You mentioned LIHTC, and for those not familiar with that acronym, it's the Low Income Housing Tax Credit Program. And so we're talking about how that subsidizes, acquisition, construction, rehabilitation of affordable renting housing, especially for, I guess, lower income individuals. What is the smart public-private partnership in terms of tackling what is really a pandemic, if you will, or endemic part of our society when it comes to, again, going back to housing not being affordable for so many?
Yeah, it's crazy. I mean, there's 14 million people living in poverty. They don't have access to affordable housing. I mean, that's bigger than the population of 46 out of 50 states. That there's a lot of Americans that just don't have access to housing. And I think that the best benefit is for, states and municipalities that have all this, decrepit housing stock to turn it over to, private sector developers, nimble entrepreneurs like myself, and allow us to, lock into and commit to low-income housing for the long term. What we really like about our model is that the idea is to graduate these people out of the cycle of poverty, right? People aren't supposed to be in public assistance and for housing forever. And I think what we're endeavoring to do is to close the wealth gap within these communities, that people are able to capture the rise in equity of the property values over a 15-year period. And by doing it at large enough scale, it's not like a raindrop in the ocean. By knocking out 150 to 250 of these units at a time, we're transforming entire neighborhoods. And so that entire neighborhood will be poised for great growth and stability for the next decade and a half. And, the fact of the matter is, these houses were built 100 years ago and they don't have any insulation in them. I mean, these things are not built for climate change. And, so we're more or less, basically, we're giving the best to the people that are the worst off.
Yeah.
Brendan, how do you balance this type of work with the other work that you do at Trident Builders? Because you guys also work on spaces like, the Ritz-Carlton, for example, commercial and private residences, and Ruth's Chris Steakhouse as well.
Yeah. So like we tend to fashion ourselves as like a best in class service provider. So we don't do hotels. We do Ritz-Carlton. We don't do restaurants. We do Ruth Chris. We do some work with the federal government. It's like for the likes of the Smithsonian, right? We really enjoy having smart, sophisticated clients because frankly they get it. Like sometimes our commitment to quality and customer service gets abused by the ones that don't necessarily understand the difference and the value add that we're bringing. This does require me to wear a different hat, though. But I still believe that same sort of tenacity and entrepreneurial spirit that we bring to bear for like our higher end customers, I think requires the same level of sophistication to really think through some of these like more embedded challenges.
Brendan, is it a model that can exist on its own without subsidies, without outside support?
Right now, the model shows that, yeah. And in fact, we're trying to work with Johns Hopkins University and Morgan State, which is a great HBCU here in Baltimore, for them to more or less develop a Harvard Business School-like case study. So not only can this be studied, it can be replicated and basically exported throughout the region. Important to note, we're going after the 4%, not the competitive 9.5%. So we don't necessarily need to have friends in the State House. We can actually just go right for the 4%ers, and it balances out. We can make good money by doing well.
I love it. It's certainly something we talk about a lot here, and it's not always so easy to do, but it sounds like you are. Brendan, come back and let us know how things are progressing. Brendan McCluskey, he is president of Trident Builders, joining us via Zoom from Baltimore. As we mentioned, Bloomberg Philanthropies is providing support for Trident's efforts. Bloomberg Philanthropies, of course, the philanthropic arm of Bloomberg LP, the parent company of Bloomberg Radio, Bloomberg Broadcast, and Bloomberg LP.
All right, let's check in, Carol, before we go on shares of Walmart. As a reminder, Walmart tumbling after cutting its profit view for the quarter and for the year. It cut its earnings guidance for the current quarter and the full year, citing the need to lower prices to clear out bloated inventories. And
I got to say, this is a stock that has been trending down since the news hit. It is now near its lows in the aftermarket, and we're talking about a 12% drop. And again, the company, as Tim mentioned, cutting its profit year for the quarter as well as for the full year. And this is something that makes you look at all the other retailers and you wonder whether they talked about bloated inventories particularly, and some other, certainly a stronger dollar. These are some of the things that are impacting Walmart at this point.
Yeah, Amazon lower in the after hours right now, as is Target. Amazon down about 5% as we speak. That company, we should note, is not reporting earnings until next week. Later this week. So we're going to hear from the company on the 28th, which is Thursday.
All right, we'll get ready for certainly continuation of Walmart into the Tuesday trade and some big tech earnings as well. And we're counting down to that latest Fed decision as well. For Tim Stanovic and the whole Bloomberg Business Week team, I'm Carol Massar. Have a good and safe evening. This is Bloomberg.